Trade this Friday morning then. Euro dollar in focus for that yields get back down to 3.5% by June of next year. Not everyone agrees. Brent, $87 a barrel, gaining 0.5%. Looking, though, still to be set for a second week of declines across oil on demand concerns and expectations that maybe the conflict between Israel and Hamas does not spin out of control. Gold at 1,986, flat currently across the yellow metal. DAX futures pointing to gains of 54 points here in the UK. The FTSE 100 is looking to add 0.4%, and the CAC current is pointing to gains of 26 points, or 0.4%. Let's have a look at how these markets are opening then, because the futures are suggesting we are going to get, at least at this stage, a fifth straight day of gains across European markets. The FTSE 100 as well, digesting the change in view around the Bank of England, and the markets are pricing in 2, possibly 3 cuts from the Bank of England next year. The BOE course and the governor there pushing back on that view. Markets and the FTSE 100 looking to add, currently adding 0.2%. So the gains coming through there, despite the softness that we're seeing on the week, at least when it comes to the oil markets. FTSE 100 now up 0.4%. We're looking for France as well. The CAC current, given the disappointment around the SocGen story, but nonetheless, the CAC current continues to push into positive territory, adding 0.3%. Over in Italy, pretty decent start to the session, adding 123 points, up 0.4%. And in Spain, a similar picture as well. Positive momentum coming through for the Spanish IBEX of 0.4%. Let's have a look at a sector level then and see how the breakdown comes through, because yesterday it was real estate adding really significant gains, followed by autos and tech. So we'll see how the sector story shifts and rebalances on the back of what we're seeing across the earnings story, across the macroeconomic data, and of course how we're readjusting to these central banks. Tech gaining 0.4%, so gaining and building on the gains of yesterday, despite the fact that there's a little bit of concern coming through from Apple, and maybe there was going to be a ripple effect and a read across. They're concerned, or at least investors are concerned, about the prospects for Apple in China. Revenues came in out of that region softer than some had expected. In terms of basic resources, gains of 0.9%. There's the energy story, just adding 0.2%. The consumer sector adding 0.6. Again, across all your major sectors, you're seeing gains today. Travel and leisure posting very solid gains of 212 points. Upwater revenue declines, and again the softness out of China. Tim Cook saying, look, he's very, very positive still about that country and about the prospects there, but pre-market you're seeing losses of 3% now for Apple. Let's cross over to Sophia Horta-Acosta for more analysis and more detail on what is threading through these markets this Friday morning. And Sophia, you've had an eye on the BOE.
The BOE, I was really interested in how we had a completely everything rally in UK markets yesterday. You had stocks up, you had gilt yields really, really drop, and also the pound was stronger. And how do you make sense of that? Because, if we are getting a kind of higher for longer scenario, that's good for the pound, because we're not getting kind of a loosening bias in the BOE anytime soon. But what stocks and gilt yields really were focusing on is actually cuts, and that's really what the BOE governor was trying to push against markets' expectations of cut next year. You mentioned, Tom, already 2 fully priced in for next year, and a third one in early 2025. So the market is really kind of saying to the BOE, we don't believe you that you're not even thinking about interest rate cuts right now, because that's all we're thinking about and pricing that in.
Yeah, and there was a really interesting and enlightening exchange between Bloomberg's Guy Johnson and the Bank of England governor on that question around how much he was leaning against the market view on rate cuts. The big data point today, of course, is the jobs data out of the US. What are you and the team going to be scrutinising?
So all this exuberance in markets, Tom, that could all change. There is a bias in the market right now towards looking for any softness in the US jobs numbers, because there's the expectations of rate cuts and the obsession with interest rate cuts is not just here in the UK. It's obviously after the Fed as well this week kind of hinted that, Jay Powell's hinting that the Fed was done with interest rates increases and kind of the job was half done. And markets really looking for evidence that you are getting weakness in the labour market. Bloomberg Economics is expecting stronger numbers, but because of the bias in the market, Tom, there's a risk that even if we do get higher than expected print, a stronger than expected print, you'll see markets kind of look, either dismiss it as this is backward looking and we're looking kind of ahead at weakness in the economy, or look for any evidence of weakness, and even if it's just a slight miss on wages.
Okay, Sophia Horta-Acosta, and what to look for from those non-farm payrolls. Thank you, of course, from our Markets Today blog. You can get more from Sophia and the rest of the team. Just go to the Bloomberg UK website or type TLIV GO on your terminal. One of the big corporate stories of the day, Immerse, the global shipping giant, on its earnings story. We spoke to the CEO. The stock is dropping today. They're concerned, and they flag concerns about freight rates, and they are cutting jobs as well. Cost cutting to be, as the CEO said, match fit for the challenges ahead. So we bring you the pricing around Immerse, because you can see the stock currently down 8%. So markets, of course, reacting very negatively to the adjustments around the forecasts for that global shipping giant. Again, head cut costs and concerns about freight rates. He thinks that further pressure could come through, and also talking to us about the potential glut as more ships come on to this market, and says that the pressure, the subdued environment, could extend to 3 years. So that stock taking a big hit in the session so far. Let me bring you up to speed on one of the stories that I think is worth your attention and worth reading, and it's an opinion piece by Marcus Ashworth in terms of the divergence that we're seeing between European equities and what is happening in the US equity space. And Marcus talking about this picture and some of what is coming through from the earnings front. So his question is this: after 15 years of US equity outperformance versus Europe, is it time then to roll out of those expensive US stocks? We know the valuations are stretched, and into Europe. And basically his answer is, the shorter answer is no. And here's why. He says, look, you've seen the outperformance of US stocks year to date, returns of about 10% versus what we've seen in Europe, which has been much more subdued than that. But he says longer term, over that horizon of 15 years, that outperformance has been even more extreme. The money invested in US indexes increasing by about 5 times in terms of returns versus less than 2 times if you've invested that money in European stocks over that 15-year period. He says, of course, there's the growth divergence that we're seeing. There's the impact, the greater impact of conflicts like Ukraine, but also the China decoupling story that is having a bigger impact on Europe. There's the fact that you can get more of a play in terms of tech and AI, of course, in the US. But he says the earnings story is reflecting this as well. Average earnings per share from the S&P 500 growing by about 12% versus the shrink that we're seeing in terms of average earnings per share in Europe of about 8%. He says longer term, this is going to remain the story because the positive demographic story in the US versus Europe and deglobalization favouring the US out of Europe. So it's a really interesting read coming through from Marcus Ashworth. Let's cross over to Joe Easton now for a touch on the stocks that are on the move. We talked about Immerse. Joe, what else are you looking at?
So we got Siemens Healthineers gaining around 4% at the moment, Tom. They are said to be considering a sale of their in vitro diagnostics units. As much as $8 billion that could be worth, according to the Bloomberg Deals team last night. And we're seeing that feed through into Siemens in terms of the positivity there. The holding company up 0.7% at the moment. As we said earlier, they still own a 3/4 stake in Siemens Healthineers, so it's benefiting them as well. In terms of the big dropper, it is Maersk, as you said, news of those extra job cuts, 10,000 jobs, 6,500 already completed. They have actually increased their shipping guidance, which was a positive line in that report, but that not getting much attention today. It is dropping 8%, the worst performance since March for AP Moller-Maersk over in Copenhagen this morning. SocGen ticking up a little bit higher over the last few minutes, almost 0.8% for them as well. They did miss on a number of their earnings metrics this morning. However, their equities business still looks pretty strong, something we've seen a lot of in this quarter in terms of the banking stocks. Then over on the second screen, we've got a couple of big movers just moving at the open. Currys is one of them, the UK electronics company announcing the sale of its Greek unit. It's only around 200 million euros in terms of the sale price, but that has been a big loss maker for the British retailer, so that's getting a positive read today. BMW, they've got their numbers out as well. Now, they're doing well in EVs. The German EV makers have been struggling against companies like Tesla and also some of the Chinese firms, but they're looking pretty good today. And Volvo Cars as well. Now, that broke just a few moments ago. Sales were up around 20% or close to 20% in the last quarter for the Swedish company, so positive on both of those car stocks today. What wasn't so positive was Solvay. This is in the chemical space, selling into areas like luxury products in terms of consumer care, like moisturizer, that kind of thing. And that one dropping today, a bit of a profit warning, could potentially be a theme that we say with a few more companies reporting out of that one over the next few weeks. Then in terms of the broker moves today, Deutsche Bank upgrades the Gucci owner Kering to buy. Now, this is interesting because this is a really contrarian view. There is a lot of negativity on Gucci at the moment. We had Goldman Sachs downgrading the stock after 5 years. Goldman said they'd got their buy rating wrong, admitted to getting that one wrong in a note to clients earlier. Kering, interestingly, does do slippers for £800 if you are looking for a Christmas present. I'll keep my eye on those ones. Now, ST Micro I've put in because it is a bit of a read across from Apple. Now, Apple aftermarket did actually drop following a bit of weakness in their iPad and also watch sales as well. ST Micro, a big supplier for them, but not seeing too much weakness in that one at the moment. Vonovia in the German real estate space. Now, they are selling a stake to private equity. This one breaking at the moment. That one just hitting the wire, getting a boost there. And finally, Wix, DIY weak once again in the UK. We've seen the same thing from B&Q. Wix saying the same. DIY sales are declining in the UK at the moment.
So, did you say £800 for a pair of slippers?
I did, Tom. Yeah, free delivery. Free
delivery, okay, that's an upside. I have this image of you in your country mansion now, flopping around in your £800 slippers, cigar and cocktail in hand. Joe Easton, thank you very much indeed, running through the stocks on the move. Coming up, FTX founder, this is the story of the day when it comes to crypto. Sam Bankman-Fried, of the year really, is found guilty of fraud and conspiracy over the collapse of his crypto empire. They came to that conclusion pretty quickly. Details are next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Happy Friday. This is Markets Today. We are 14 minutes into the European trading session, and you are seeing gains across European equities of 0.3%. Now, risks are building inside the $1.6 trillion private credit market, and regulators are not doing enough. That, at least, is the view of two PIMCO executives. Meanwhile, the head of the UK markets regulator says they're closely monitoring areas of finance with elevated leverage that have grown as interest rates have ramped up. For a view on this space, let's bring in Sebastiano Pirro, who's the Chief Investment Officer at Arbitrage Investments. And Sebastiano, I just want to take a step back and get your views on the central banks, because there's still a bit of a debate going on in terms of whether or not we really are done with this hiking cycle. Do you project out to cuts now? Where do you stand on this debate?
I think we're done. We're done around hiking. I think it depends also where you are. Not the whole world is moving at the same pace. The U.S., I think the debate can be open, depending on, the extent of their fiscal measures and where we land on that. Although, even there, the debate is wide open, and my view is that it will come down. In Europe, I think we're definitely done. So in Europe, I think it would be probably increase in gas prices. So quite frankly, I think we'll realize quite quickly that we have done enough, if not too much.
Okay, and those higher rates are leading, of course, to pretty juicy returns in terms of cash. So how do you convince investors to get exposure to credit when you can get easy and safe 6 or 7% in cash?
Much.
Okay. Convince investors to get exposure to credit when you can get easy and safe 6 or 7% in cash?
Well, in euros is more like 4 to 5 safe in cash, and you can still find areas of the market that yield 8 to 9 and pretty safe, right? Banks are one of those. And so, for example, I'd say, well, if you have a yield that is 2 times cash and 3 times inflation, the risk reward is still pretty favorable, and ultimately clients do buy that. And so, yes, I think the challenge is when curves are inverted, the challenge is more around the tighter spread part of the credit market. Although there are some wide and safe, even though the economic backdrop is deteriorating and will probably deteriorate going forward, there are areas that do present a lot of value, both from a 3-year view and from a 15-year view.
So talk to us about those areas that present value right now.
Yeah, I think, financials really stand out. You look at 81 bonds. Yes, of course, there's been an event this year, a big one.
Just a minor event around Credit Suisse and the write-down of 81 bonds. And that hasn't put you off from 81 bonds?
No, absolutely not. I think that understandably was a one-off and something really, really specific. It was really about its own story, right? And it was Credit Suisse, of course. Everyone else has nothing to do with that, and you can't really replicate history. I know we like to look back and think what will happen going forward, but ultimately, that was really a one-off. Everyone else is enjoying a situation where think asset management. In asset management, there is fee pressure, but generally on average, you make 50 basis points on a management fee. Today, the average European bank is making 4% management fee on cash, and they have a big amount of excess cash. So revenues are growing. They have grown by 25% over the last 2 years, and costs have not. As simple as that.
Where are the most acute default risks in this higher rate environment?
Well, of course, we come from zero rates, which have meant that companies basically were issuing debt and interest was not a problem. So ultimately, you were rolling on that, extend and pretend. Today, you're called for some areas of the market, you were financing at 3-4%, and today that number might be 9-10. So, of course, the maths may stop working for the highly levered companies. And today, those parts of the market are probably optimistic about the ability to refinance at some later date when interest rates are going to be lower than today. However, the bill is going to come due if, for example, what is priced today into the rates market materializes, right? So ultimately, one part of it is wrong because some parts of the high yield market, for example, are going to be mathematically unable to finance at 10-12% and that's the going rate today, right? And the credit market might be saying, well, 2 years from now, rates are going to be lower. Management teams say this, Well, yes, we have this debt, and yeah, we have to refinance. And today, yes, it's very high, but come 2026, it's going to be lower. If that does not happen, and we do expect rates to remain higher than they were before, so we don't expect rates to go back to zero or negative, and nowhere close to that. So there are risks. There are also opportunities because not everyone is like that.
Okay, yeah. So if they get that call wrong, we remain at levels of 10, 11, 12%. There could be some blood in the streets. Sebastiano Pirro, thank you very much indeed with the view there on the opportunities around EU financials and the credit opportunities there in this high rate environment. Sebastiano Pirro, Chief Investment Officer at Arbitrage Investments. Back to the crypto space now then, and Sam Bankman-Fried has been convicted over the collapse of the crypto exchange FTX. The jury deliberated over its verdict for less than 5 hours following the month-long trial. Joining me now is Bloomberg's senior crypto editor, Ana Herrera. Ana, what are the details then around this guilty verdict for Sam Bankman-Fried?
Yeah, so he was found guilty of 7 counts of fraud and conspiracy.
Is that all 7 counts?
Yeah, there's more that are going to come. They separated part of the charges for the indictment, and so he's going to be sentenced in March. Obviously, as you said, it took only 5 hours, which is very short given how massive the trial is. And this has been, described by prosecutors as one of the biggest frauds in financial frauds in American history. So it's quite significant. He could face up to 20 years for each of the most serious counts. Wow. So that's a lot of time in jail. And clearly, this stands out for the crypto industry, right? It's a big stain. Some people are trying to distance the industry and crypto the asset from what's happened. But for retail investors, you associate crypto with FTX, and so who knows if they'll ever really come back to the industry.
Okay, and some of those investors still trying to get their money back and working through that process. Anna, thank you very much indeed with the details around that guilty verdict for Sam Bankman-Fried, what it means for the broader crypto space. From our crypto team, of course, Ana Herrera. Coming up, plunging the third quarter profits at SocGen. We're going to break down what has gone wrong at the French bank. That is next. This is Bloomberg.
Did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behaviour was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
Top names at the Fed are on Bloomberg.
The economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough.
The bond market has tightened quite considerably. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Nobody covers the Fed like Bloomberg. Context changes everything.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
This is Markets Today, 24 minutes into the European trading day. Gains of around 0.2% across the European Stock 600 benchmark. On the banking space then, the lens is on SocGen, where profit has plunged as wrong way hedges on interest rates weighed on lending income at its retail unit. Both net income and profit came in well below the estimates. Despite that, the stock is just holding on to gains of 0.9% in the session. Let's bring in Bloomberg's Caroline Connor live from Paris. Caroline, it seems then like another disappointment for SocGen. What did you take from these third quarter earnings?
Well, if you look at the share price reaction at the open, clearly some investors are seeing some positive and some negative in the third quarter earnings from SocGen. Obviously, the shares have lost a lot since the very disappointing strategic plan unveiled by the new CEO, Slavomir Krupa, in September. And this quarter, of course, you have these two misses when it comes to net income and profit. Also, difficult time at the French unit where they had some hedges. Basically, 2 years ago, they bet that interest rates would go down, and those wrong hedges impact are peaking this quarter. That's what they're saying. So pretty bad impact also on the French unit. But there are also some positive elements that we're seeing in the third quarter earnings. When it comes, for example, to trading, both fixed income revenues and equities revenues actually were a beat, even though these revenues were down 1% for equities, down 4.6% for fixed income. If you look at the peers, for example, BNP, Deutsche Bank, they had revenues for fixed income, for example, down 12% in the third quarter. So slightly better situation when it comes to trading for SocGen. And also, if you look at capital strength, their CET1 ratio was actually a beat due to lower regulatory headwinds. So a bit of a mixed set of earnings. We'll see how it evolves in terms of stock reaction throughout the day, and whether this actually alters the narrative, the very negative sentiments we've had around SocGen since Slavomir Krupa took over from Frédéric Oudéa last May.
Okay, Caroline Connor, out of Paris, live for us, breaking down with clarity the mixed picture when it comes to those results for SocGen. As you say, we'll keep across the stock move, currently gaining 0.7%. One analyst describing the results as messy. Again, across your European benchmark, gains currently of 0.2%. Coming up, no holiday cheer for Apple as the tech giant warns its revenue in the upcoming quarter will be the same as last year. Shares drop in pre-market trading. We break down the details and the prospects for Apple in the quarters ahead. This is Bloomberg.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
This is Bloomberg.
Happy Friday, this is Markets Today, 30 minutes into the European trading day, and here are your top stories. Asian stocks gain following the S&P 500's best day since April, as attention now turns to US jobs data. Apple's warning of a sluggish holiday quarter ahead takes a bite out of US futures. Convicted FTX founder Sam Bankman-Fried is found guilty of fraud and conspiracy over the collapse of his crypto empire. The jury returning its verdicts in less than 5 hours. Plus, Immerse plunges the most since March as the shipping giant sees a worse than expected outlook and job cuts as a sector-wide slump continues. Let's check in on these major indexes then, with a focus on what's happening in France and Germany, particularly with the upside coming through, in fact, for the auto sector. The last time I checked, the leading sector across these markets. Across the benchmark, gains of 0.3%, so we are still on track for a fifth straight day of gains across European equities. The DAX, though, posting 42 points at 15,185, gaining 0.3%. BMW, and that stock is on the upside this morning after some optimism there. The FTSE 100 trying to get to that 7,500 level, adding 20 points, 0.3%. Let's flip the board and have a look at the sector breakdown then. I talked about autos, and it was autos that was near the top of the list yesterday, along with real estate and technology. Today, technology is adding 0.3%. When it comes to the auto sector, you're looking at very solid gains once again of 1.5%. The optimism coming through from both Volvo cars and BMW. Travel and leisure gaining 1.4%, another leading sector in the session today. The yield story is consequential for travel and leisure, of course. One sector, one of the major sectors in the red, there's a couple more, but one of the major sectors is energy, down 0.2%, and we are on track as things stand for a second week of declines around oil prices. Part of the geopolitical concerns starting to ebb there, and the demand questions as well in focus for the energy sector. Basic resources also adding gains of 0.7%. That's a picture across your sectors, again across the benchmark, gains of 0.3%. Let's get back to the tech story then, and the focus and the lens on Apple, because pre-market you're looking at losses of 3%. Part of that is disappointment around China. The tech giant warning that revenue in the upcoming holiday quarter will be about the same as last year. That's the broader picture. The China element is consequential as well. Wall Street had projected growth of about 5%. Revenue in Greater China then declining 2% from the year earlier. But the CEO, Tim Cook, said he is still, quote, very optimistic about prospects in the country. Let's break all of this down then and bring in Matt Bloxham, who leads Bloomberg Intelligence's tech coverage. And Matt, I should say, what is was behind the more muted holiday outlook then? The holiday quarter is normally a bumper quarter historically for Apple. Why are they concerned?
Yeah, that's right. And I think it's still going to be a really important quarter for them. I think a few things to point out here in terms of that holiday quarter. The first is that this year there's only 13 weeks in the quarter, whereas it's 14 last year. The CFO pointed out that that contributed 7 percentage points of growth last year. So that's a really big headwind for them year on year. But I think you've got some different trends in their product lineup. So iPhone is still expected to grow, but they're going to see weakness in iPad and wearables, so things like watches and headphones. Services, though, should also grow. That's been a kind of really important factor for them. So, yeah, kind of a few mixed things there, but you can't underestimate that extra week last year that really gave them a big boost.
Any big surprises out of Q4 for Apple?
I think, obviously, the big one was the weakness in China. I mean, I think people were clearly worried about China, but the $2 billion miss, the market was looking for maybe about 10% sales growth, and it was a 2% decline, as you said. So that was a surprise. But when you kind of drill into that, I think what's doubly surprising, I think the instant reaction was, iPhone must have been weak, because obviously Huawei's been resurgent there. But actually, they had a record quarter for iPhone in China. So it was these other product segments that were weak, and those other product segments, particularly Mac, was weak across the whole company, again, because they had a really good quarter last year on that product.
Okay, that's really important context. They had a record quarter for iPhone sales in China. So it's not so much a concern. Yeah, Huawei is a little bit more competitive, but actually you need to look at this through a different lens and look at the other product categories.
Exactly.
How does that story, how does that geography, do you think, evolve for Apple in the quarters ahead?
I mean, it's a good question. I think we only saw a glimpse of Huawei's resurgence in that last quarter. I think Q4, or the holiday quarter, their Q1 will be a tougher quarter, I think, for iPhone in that market. I think this confidence you pointed to with the Tim Cook commentary, I think that's because they still see a growing middle class in China, and that cutting through all the geopolitical tension, the Chinese consumer loves Western luxury. iPhone, Apple devices are seen as Western luxury, and so there'll still be, over the long term, good demand for that product, and they can continue to gain share maybe over the mid to long term. I think that's the Apple mindset about China.
Yeah, I have to say, I do think sometimes that whole, China nationalism is going to drive everyone towards Huawei and Oppo is a little overplayed. People love their Apple products still in China, but their incomes have been squeezed. Matt Bloxham, thank you very much indeed with the details and analysis around Apple from Bloomberg Intelligence. Staying on the tech story then, Elon Musk renewing calls for regulations on artificial intelligence during an on-stage conversation with the British Prime Minister Rishi Sunak. He also added that AI holds untold promise.
I do think overall that the potential is there for artificial intelligence, AI, to have most likely a positive effect and to create a future of abundance where there is no scarcity of goods and services. But it is somewhat of the magic genie problem, where if you have a magic genie that can grant all the wishes, usually those stories don't end well.
Okay, Elon Musk there talking to our UK Prime Minister Rishi Sunak. Let's bring in Charlie Wells now for the analysis on this. Charlie, it's always seemed like a bit of a gamble for Number 10 and for the Prime Minister to invite Elon Musk to have a one-on-one with our UK Prime Minister at a time when he's facing a lot of polling and electoral pressure, of course. What was the rationale for having this sit-down? How did it play out?
Yeah, Tom, this was risky. I mean, we all know how controversial Elon Musk can be, and he can kind of flip-flop from one position to another. And watching that conversation last night, it almost felt as if someone had said to ChatGPT, create a conversation between a former Goldman Sachs banker turned politician and the world's richest man, and have them talk about high-level issues with AI. It was a little bit clunky. There weren't a lot of specifics there, but what Rishi Sunak really needed was some star power for this AI safety conference he's been hosting here in the UK, and he certainly got that with Elon Musk.
Yeah, they got the star power. They certainly did. It was a big coup for the UK as they arguably struggled, some would say, to bring in some of the big political hitters. They managed to definitely get that stardust with Elon Musk. What did he say? In terms of his views, Elon Musk's views on artificial intelligence, how aligned is he or not with other tech executives in terms of, is he an outlier or is he consensus now?
Yeah, Tom, that's a really good question, because you might sort of be surprised to hear Elon Musk, typically very contrarian, someone who likes to say controversial things, actually calling for regulation. Rishi Sunak, in sort of an unsettling moment, asked Elon Musk, what should governments be doing about AI? To which Elon Musk responded, there really needs to be a referee here. We need to, make sure that, there are guardrails in place. And that might sound surprising, but actually for a long time, Elon Musk has been talking about this. He's taken issues with OpenAI, which has gained a lot of notoriety recently. He left the board a few years ago. And so in some ways, he's fairly in line with executives. Joe Biden recently signed that executive order on AI. Executives at IBM, at Microsoft praised that. But I think what's interesting and where we are is there's a lot of positive talk about, protecting consumers as far as AI goes. But where executives might not be so happy is if legislation turns towards dictating what developers can do.
Okay, Charlie Wells with the analysis there and the reaction to that at sometimes and at points slightly awkward conversation between the UK Prime Minister and Elon Musk. Thank you very much indeed, Charlie Wells. Of course, coming up, FTX founder Sam Bankman-Fried is found guilty of fraud and conspiracy over the collapse of his crypto empire. We bring you the details on that story. It's next. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
You told your mother you'd like to go to Africa and see the chimpanzees, and what did she say?
Not the chimpanzees. I would have studied anything.
Well, what did your mother say to anything?
If you really want to do this, you're going to have to work really hard, and if you don't give up, hopefully you find a way.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This rickety train running across Angola is at the forefront of efforts to loosen China's influence on this part of Africa. It's about to get hundreds of millions of dollars of U.S. investment with one goal in mind: moving valuable natural resources from what's known as the Central African Copper Belt to the west.
More than a kilometer below my feet lies enough copper in a high concentrated form to power over 100 million electric vehicles.
But getting those metals out of the mines is only the first step. Almost as difficult is getting them from the mines hundreds of miles across to the ocean, to the ports, and onwards to their final consumers. That's where the Benguela Railway comes in. The Biden administration has a grand plan to finance the refurbishment of this railway.
I think there's been a realization from the US in the context of a broad competition with China that the African region could be an area where that competition could really play out.
Still, investment in the region from the US and its allies remains a fraction of what China has put into the continent over the past decade.
The biggest question is not about what US or China are getting out of Africa. The biggest question is, what are African countries getting out of their relationship with the US and China? And is that delivering development?
Okay, that was a Bloomberg Originals report on the so-called Lobito Corridor project. Staying on the continent, South Africa is hosting US-Africa trade talks this week at the AGOA Forum. Catherine Tai, the United States trade representative, spoke exclusively to Bloomberg's Jennifer Dabasaja about the future of the agreement.
One development I wanted to reflect is the coming into being of the African Continental Free Trade Area, which is really consequential. The aspirations of the countries on the continent to integrate economically. I think that, as part of looking at the AGOA program, we should try to figure out whether there's more and what more we could do with the AGOA program to complement the program and the aspirations that are within the AFCFTA. Second, we have asked an independent U.S. agency run by economists to take a look at the performance of AGOA as a program and assess how effective has it been. And one of the findings that has come out of that study is that utilization rates by our partners on the continent, the rates are uneven across the continent, and then overall we're seeing a low rate of utilization. So I think that there should be an opportunity for us right now to examine how we can improve utilization rates and make them better across the board. And then I think that the third element I would really like to look at is for the economies on the continent that have experienced very robust growth over the course of the last years and decades, as they get closer to the graduation point for AGOA, because AGOA is meant as a trade and development program, how can we start articulating a forward vision for U.S. Economic collaboration and partnership with the countries on the continent who are looking at the possibility of graduation in the near to medium term. Right now, the way AGOA is designed, once you graduate out of AGOA, you kind of start over at square one in terms of your trade relationship with the United States. We would like to take the opportunity, we, the administration, certainly would like to take the opportunity to think about how to articulate a forward version for continuing to build on a partnership with the countries on the continent.
Okay, Catherine Tai there, speaking to Bloomberg's Jennifer Dabasaja. And you can watch our brand new Bloomberg Africa Amplified show, hosted by Jennifer Dabasaja, on the last Friday of every month. Right, also making news this morning, let's start with the latest from the Middle East. US Secretary of State Antony Blinken has arrived in Tel Aviv for talks. Meanwhile, Israel has restated that a ceasefire is not on the table. The UN says ground operations are continuing in Gaza alongside intense bombardment overnight. And later today, the leader of Lebanon-based Hezbollah is expected to deliver a speech discussing the conflict. The president of the United Auto Workers is confident he can take on Tesla, telling Bloomberg, quote, "We can beat anybody." Fresh from contract wins at the big three US car makers, Sean Fain says he's already seeing non-union plants and workers react to the deals and is ready to go after them. The UAW has unsuccessfully tried to organize at the electric car maker in the past. Jeff Bezos is moving to Miami. The Amazon founder, the world's third richest man, says he's leaving his home of 29 years in Seattle. The move takes him closer to his parents and to his space exploration company's operations in the region. Now, to crypto and the big story of the year. Sam Bankman-Fried has been convicted over the collapse of the crypto exchange FTX. The jury deliberated over its verdict for less than 5 hours following the month-long trial.
This case moved at lightning speed. That was not a coincidence, that was a choice. And it's also a message. It's a warning, this case, to every single fraudster out there who thinks that they're untouchable.
Okay, joining me now is Bloomberg's senior crypto editor, Ana Herrera. Ana, what were the details then from this guilty verdict?
So he was found guilty in 7 counts of fraud and conspiracy, and he could face up to 20 years for each of the serious counts, right? So that's a lot of time in jail. He will be sentenced in March, so we'll wait to see. There's another part of the trial that's still coming. Obviously, this has a massive impact, I guess, on the wider crypto industry. The whole year has been sort of marked by this trial and this what happened there. But we still see Bitcoin surprisingly at 35,000, which is, might be a shock to some.
Yeah, 34,369, so just below that 35,000 level you talked about. So down 1.6% in the session. Of course, within the context of crypto volatility, that's not a huge move. We heard the warning there from the prosecutor, fraudsters out there. What are the broader takeaways going to be then for this crypto sector?
I guess part of the people in the crypto industry have been saying for the past year, this is not really about crypto, it's about fraud, and you could have had fraud in any other asset class. But obviously, if you're an investor in crypto, especially given FTX's reach in the mainstream, you might be associating crypto with FTX and SBF, and it's hard to separate the two. So we've seen the price pick up, but we really haven't seen an influx of retail investors, and we're wondering if they'll actually come back, if this has scared them off. And on the other hand, if you're an exchange person running an exchange in crypto, it's been a tough year. Regulators have been cracking down everywhere around the world, and there's the other biggest exchange, Binance, has been sued by the SEC, the CFTC. We've reported that they're under investigation by the DOJ. So it feels like it's the end of an era, but the era is still continuing.
Yeah, it's often a refrain. It's a common refrain, isn't it? One exchange collapses and the crypto world turn around and say, well, they're just bad actors. It's not about the broader sector. What, on the bull case, is happening in terms of the ETF front, and how much optimism should crypto investors maybe take from what's happening in terms of the regulations and the approvals of some of these ETFs?
So people behind those think that they will be approved. The SEC has been losing some cases in court. So, even if they are cracking down, and there is the expectation that if these come, the price will spike. We have stayed up. So there's an idea that now Bitcoin and crypto might be finally getting really institutionalized. But again, will that mean once they get approved, will we see a 10% spike and then more people coming in, or will it just be like, we'll just wait?
Sit it out for a bit longer, for a bit more clarity. Bloomberg's senior crypto editor, Ana Herrera, thank you for the context on the back of that guilty finding from the jury when it comes to Sam Bankman-Fried and the implications for the broader crypto space. Coming up, European stocks edge higher as traders await US jobs data due out later today. We discuss that next and take stock of the week in markets. This is Bloomberg.
And money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
DOJ or other authorities
Could face bigger challenges next.
Was going to keep Rain World Cup. This is a 3
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
We still see the risks to inflation as being on the upside at the moment. And it's important not for that message not to get lost. If the market has taken from what we have published today a view that we are leaning towards more cuts, then I'm afraid I will lean against that.
Bank of England Governor Andrew Bailey there, pushing back on market expectations for rate cuts from the British Central Bank. Let's talk about what's happening across these markets more broadly and bring in Bloomberg Markets editor Lynn Thomason. And Lynn, we are on track, as things stand, for 5 straight days of gains across European equities. Is Apple going to be the party spoiler?
Sure feels like that this morning. I mean, I think a lot of it's still going to be riding on the jobs report, but certainly you look at what Apple is saying, especially with Christmas on the horizon. It's bad news about China, bad news about the Christmas holiday shopping season. Yeah. It's hard to see how the NASDAQ is really going to make any more headway with Apple falling like it is today.
And the NASDAQ to that point, currently futures pointing lower by 0.3% of 8% after a positive day yesterday. When it comes to the non-farm payrolls, the jobs picture out of the US, is this one of those days where we'll get the data print and we'll be able to walk away and say, finally, we have clarity on what's happening with the jobs market? Or is it going to be a lot more nuanced?
Ooh, if I could say we could all walk away with clarity on the jobs market, be a different story. I mean, I think really in the sense that the Goldilocks picture is going to be a softer jobs report. What could really hurt this market sentiment is we come out with a blowout, strong, amazingly strong labor market. And that would really, hit the picture that the Fed may not be able to stay on hold. And that sort of will cause people to readjust their expectations for what happened this week.
And the survey is for 180,000 in terms of non-farm payrolls. So you're talking about the impact there in terms of the assessment on central banks and the next steps for the Fed. And we discussed and we noted the fact that European equities have had a solid week. When you take a step back and look at the global markets and the upside that's come through, the risk-on moves within equities this week, what is your sense when you read the analyst notes, when you speak to investors, as to whether or not this has legs?
I think it's, the way I hear it described this week is this has been a sugar rush in the sense that we've had such a big sell-off recent times. Markets have really fallen steeply on the expectations of a hawkish Fed. So even just the hint of a more dovish Fed has sent the S&P 500 up something like almost 5% this week. And that really sort of speaks to the importance of the jobs report this afternoon in the sense that will that be able to continue? I think if you see a weak jobs report, that'll give people the confidence that yes, things have gotten oversold and perhaps we'll continue to see a bounce. Again, if you see a really strong jobs report, it might reinforce that negative picture that we've been seeing, through October, September.
Yeah, we know what it feels like when the sugar rush fades. I can do with some sugar now, maybe, to perk me up a bit. When it comes to next week, what are you looking ahead to next week then? We've still got a few earnings trickling through. You flagged the non-farm payrolls for today. As you project out to next week, what is key for you?
Yeah, that's a great question. I think, the last of the earnings season will sort of start to come through. My sense is that people are going to be continuing to focus on how does that Christmas shopping season pan out? So, what does historically the S&P 500 tends to do very well in the latter half of the year. So you have a lot of people talking about the seasonality for this market looks really good. But if you start to see companies coming out saying it's going to be weak, it might be a different picture.
Lynn, fantastic. Thank you very much indeed. Bloomberg Markets editor Lynn Thomason there. That's it for the Markets Today show. You're seeing gains across European equities of 0.4%. Stay with us, though, with a really important conversation with Germany's Vice Chancellor. This is Bloomberg.
there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Scranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Wall Street's rally bolsters sentiment as investors look for further conviction on the Fed's rate path. The focus now turns to the U.S. jobs report, which may show hiring cooled in October. An unusually swift verdict. It took a jury less than 5 hours to find Sam Bankman-Fried guilty of all 7 counts of fraud and conspiracy. And Apple warns of a sluggish holiday quarter ahead. Share slump CEO Tim Cook struggles to assure Wall Street that iPhone demand remains strong in China. It's been a heck of a week for the bond markets, from Lagarde to Bailey to Powell. They're all trying to push this narrative that they're at the top and we're in pause. This is the space of a week for 10-year government bond in the United States of America. We've dropped from a high of 30 base, 493, down to 462. Flatteners are in. 2s 10s, 2s 30s have had the biggest flattener in a number of months. So, of course, the question is, fool me once, shame on me. Fool me twice, shame on you. Or is it the other way around? The bottom line is, do you believe this rally? That's what you need to ask yourself here. Franklin Templeton, Citadel Securities, and K2 all say to us, do not get overly enthusiastic. Curb your enthusiasm. Was this the tail that wagged the global bond dog yesterday? This is the UK government gilt market. The bottom line for the gilt market is Bailey pushing back. You expect rate cuts? No, that's not where we are. Now, the bottom line is this. The betting by the bond market is that central banks have actually broken something. They've already gone into a quasi-policy era, and they're going to have to cut, and they're going to have to cut more aggressively next year. That is part of the flatteners. That's part of the narrative of this drop in yields. You've got the dollar index dropping again, the biggest weekly loss in 3 months. It's about indigestion and doubt. That's what Kit Jukes said it is. Indigestion in the bond markets, indigestion in the dollar market. Let's see. Danny Berger, good morning. It's Friday. It's Jobs Day. Forgot to mention that.
Oh, yeah, that old chestnut. Look, it's an interesting setup for this equity market into Jobs Day. A massive rally of more than 1.5% across basically every single benchmark index. It ebbs a bit today. It was the best day since April yesterday. Was also heading for the best week at this point since November of last year for this equity market. So maybe not surprising. We're selling down 0.1%. NASDAQ, though, underperforms, down 0.4%. How much of this is Apple coming to crash the rally party? Pre-market Apple down more than 3% last I looked. That should be on the bottom of your screen so you can check it out for yourself. There you go. Apple down nearly more than 3.33%. And then we have European equities maybe continuing the rally thanks to where Wall Street closed yesterday, up 0.33% in Europe. We also had SocGen earnings. Profit fell. There was also some wrong way bets on interest rates. Even so, SocGen shares so far in today's trade are higher by nearly 1%. So, Manus, this is the situation we have. You had the NASDAQ S&P, Russell 2000, and TLT all rally yesterday, more than 1.5%. That's the first time all of those assets have done that since January of this year. And let me show you what that's done to FCON. Financial conditions, at least the U.S. index compiled by Bloomberg, is now almost back at zero. Man, as for all that talk that the bond market's doing the work for the Fed, we're almost in easy conditions again.
Listen, you're just so happy that you find the best fact of the day. That is the bottom line for you. Right? Yeah, you had an extra hour's sleep, so you decided to go find a fact and I'd trump me. But you're right. The whole heavy lifting that the bond market did is perhaps not for naught, but of course it is jobs day. Today could define. We're expecting 157, a lighter number than 326, which we had in the last month. Is this the beginning of the edifice of this slowdown? Just look at the Maersk numbers this morning in terms of job cuts. So the narrative is shifting. But you see, this is what happens when you get an extra hour's sleep, many extra hours sleep.
I spent it in Excel, basically.
You built in Excel. You built an Excel on a Friday morning.
Yeah, no, because I had more sleep than you, I just opened up Excel and built a model this morning. That's all. No big deal.
It's what she does in her spare time. Okay, let's talk about Sam Bankman-Fried, because he's been convicted of a massive fraud that led to the collapse of the entire empire of FTX. The U.S. Attorney for the Southern District of New York, Damian Williams, spoke after the verdict.
The cryptocurrency industry might be new. The players like Sam Bankman-Fried might be new. But this kind of fraud, this kind of corruption is as old as time, and we have no patience for it.
She's got a lot of patience, Shonali Basak. She's chased this trial for weeks. Shonali, good to see you. Thanks for getting up early. He perpetrated one of the biggest financial frauds in American history. This was the attorney, his words. Your take, I mean, are you surprised? I mean, some of the sentence, well, we haven't got the sentencing yet, but some of this is quite staggering.
Yeah, it is quite staggering. I think what's more surprising is how quickly the jury had come out with the verdict. It was within a span of less than 5 hours. And remember, the timeline could have pushed into next week. They stayed late. They were given cars last night from Southern District to make it home. They stayed beyond yesterday what they were meant to initially. And so the way that this was done after really just a matter of weeks, it felt long if you were sitting inside of it, but the prosecution was very organized. They had 3 cooperating witnesses who had pled guilty, who were very close members of the inner circle. It's not that surprising that at the end of the day he testified. We know he likes to speak for himself. There's still a long road ahead for Sam Bankman-Fried, as well as the others here. The sentencing is not slated until March.
So what happens next then? What does that long road look like for Sam Bankman-Fried?
Yeah, you have to remember that he's still facing other charges. So as part of this trial, he had been found guilty by a jury for 7 charges, but he also faces charges related to campaign finance and bribery. And so he will potentially be retried for those charges as well on top of this. And as far as the sentencing goes, very unclear how long he might be facing prison time. Each of the charges he was already facing guilty verdicts for could face up to 20 years in prison each. So is he going to be spending life or some sort of reduced sentence? And same goes for his former colleagues who had also pled guilty for reduced sentences. Will they spend any time in jail is still unclear.
So if you look at Bitcoin overnight, of course, it's dealing with, you know, will there be an ETF regulation come through? You know, we're dealing with the machinations of that. Where do you, or what feeling do you get from the marketplace that this is, for want of better words, a Damascene moment for crypto, that this is a clearing out perhaps of things that will not be tolerated again, or perhaps Wall Street won't be duped again in the way that it was, and they just went, hey, Sam, how much do you want from me?
Let's start with the Wall Street side of that, because overnight you had Sequoia partner Alfred Lin, who had tweeted about the verdict here. And really you saw Sequoia, which was really one of the key players in the investment community here, who had written a 14,000-word, really love song, let's call it, to Sam Bankman-Fried.
Ode to Sam.
Ode to Sam. And now they are coming out and saying, you know, we, like many others, were deceived. So you have them immediately distancing themselves. You have another large investor, Anthony Scaramucci, who had spoken to us this week. FTX FTX had invested in his Skybridge. We asked about whether his relationships, particularly those in the Middle East, were tarnished or took a hit in the wake of what had happened at FTX, because Anthony Scaramucci was the man who took Sam Bankman-Fried to meet the Crown Prince of Saudi Arabia and try to seek rescue financing or new equity financing. And he did say that, yes, initially this was a reputational hit, but a lot of investors are now dealing with the fallout. Crypto industry itself distancing themselves from FTX, but a lot of consumer advocates coming to the surface and really saying that Sam Bankman-Fried was not a one-off in bad behavior in the industry.
Yeah, not even to mention the fallout for Tom Brady and Larry David. Shonali, thank you so much for helping us cover this. Bloomberg, Shonali Bassick there on SBF. Let's turn to our other top story of the morning. Apple has warned that investors won't see the rebound in growth that they were hoping for. The tech giant faces a slowdown in China and a possible sluggish holiday quarter. Joining us now is Matt Boxham of Bloomberg Intelligence. Matt, when it comes to the China issue, was there any clear indication of how much the political element played into iPhone and future iPhone sales? That is, China banning iPhones for state companies and for government positions.
There wasn't. If anything, it was the kind of the flip side of that. They had a record quarter on iPhone sales in China, and Tim Cook was optimistic about the prospects of the market. So I think that was quite interesting in its own right. And it was other products that were weak for them in China in the quarter's report. A $2 billion miss on revenue, expectation for 10% growth. It's ranked 2%. So it really was a kind of big miss on those other products. I think probably this holiday quarter is going to be a bigger challenge for them in China, because you'll get a full quarter of this new Huawei Mate device, which just suddenly kind of launched onto the market, surprised everybody, and it's been really popular in China. So that may kind of create some more headwinds. And I think that's going to, temper investors' confidence in the China story, I think, for a few quarters to come.
And yet, ironically, the iPhone sales, I mean, I know it was Mac and iPad that caused them a bit of pain, but iPhone quarterly revenue in China was a record. This is the fourth straight quarter of decline, okay? So this is the longest run of decline since 2001. You'll hear people holler from the gods that this is peak Apple and it's over. But what does Cook need to do? Is it down to AI, generative AI? They're investing quite a bit. How did the market look at that?
Yeah, I mean, again, they were muted on what they'd say about that, but I think that is going to be an important part of future product refreshes, and I think that's, for me, one of the important things from this year. If you look at the product lines that were either weak last quarter or expected to be weak in the holiday quarter, it's product lines where there hasn't been a refresh for quite some time. iPad, or the refresh has been fairly low-key. So I think product refresh cycles are really important, and AI is going to come into that in a really big way.
Well, I know Manus isn't buying me a new iPhone for Christmas, so
I am in the market for a new iPhone. I am in the market for a new iPhone. I'm trying to. I am. I've got 3 old ones, and so I'm looking for the trade-in value. So I am. But my poor phone still thinks it lives in Dubai. If the poor phone doesn't know it's actually physically moved and got a visa.
You know what I'm hearing from you, Manus? You've become the hedonistic American. That's what I'm hearing from you.
There you go. That's a toxic marriage. A hedonist Irishman living in the Middle East who's come to live in America. There you go. I'll leave you with that thought.
I love it. Hey, Matt, thanks for joining us and for dealing with us. Matt Boxham of Bloomberg Intelligence there. All right, Manus, let's get to some of the other top stories that are trending on the terminal this morning. Jeff Bezos, he's moving to Miami. The Amazon founder and world's third richest man says he's leaving his home of 29 years in Seattle. The move takes him closer to his parents and to his space exploration company's operations in the region. Miami has emerged as a popular destination for other tycoons, including Ken Griffin.
Maris, a bellwether for global trade, is down more than 9% after saying it's cutting at least 10,000 jobs to shield profitability. The personnel reductions, equivalent to 9% of the headcount, are prompted by lower freight rates, increased competition in marine transport. About 6,500 of those positions have already been eliminated.
Israel says a ceasefire isn't on the table with Hamas as Antony Blinken arrived in Tel Aviv for talks. He is meeting with Benjamin Netanyahu, the war cabinet, and President Isaac Herzog. Indications of further spillover could come in a speech by the leader of Lebanon-based Hezbollah later today. Manus.
Coming up, we have a conversation with Germany's Vice Chancellor. Anna Edwards is on the ground. Robert Habeck joins her, talking about the current geopolitical climate amid the Israel-Hamas war. Stay tuned for that one-to-one. Anna Edwards and Robert Habeck right here on Bloomberg Brief.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names at the Fed are on Bloomberg.
The economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough.
The bond market has tightened quite considerably. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Nobody covers the Fed like Bloomberg. Context changes everything. Last month's jobs report caught everyone off guard.
Major upside surprise on the headline number.
Considerably stronger than people thought.
Almost twice as much as what the expectation was.
Today, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Rates are going to have to stay higher for longer, potentially even go higher.
Can there be lasting damage here?
Those cracks are starting to form.
The October jobs report, today on Bloomberg Television and Radio.
This is Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. Now, a year on from Europe's energy crisis, German Vice Chancellor Robert Habeck is in London to meet with the UK's Energy Secretary. Bloomberg's Anna Edwards is there, here with him now. Anna.
Danny, good morning, and Manus, thank you very much for having us. Let's get straight into the conversation with Germany's Vice Chancellor, Minister for Economic Affairs and Climate Action, Robert Habeck. Vice Chancellor, thank you very much for coming to speak to us today. Let's start our conversation on some of the geopolitical themes that the world is watching very closely. You put out a video yesterday talking about your concerns around a rise in anti-Semitism in Germany, expressing concern about that. How widespread is that fear, do you think? Why did you feel you wanted to make those points yesterday?
Yeah, good morning. Thanks for having me. The video was targeted, I can say, to the German population and society and people, but maybe the concern is broader than only Germany. But as I'm a minister for Germany, so I speak to the German people, for me, it seems like, compared to other horrible events, the solidarity with Israel is very, very weak, or seems to be weak, only on a rhetorical basis. Therefore, I just tried to divide the things and say, okay, the suffering in Gaza is terrible, but of course, Israel has all the right to protect itself, and in Germany we have a special history. We have to support Israel. That was the sense of the video.
You're right that lots of Western governments are also dealing with these same questions. How do you allow people to show support if they wish to for the Palestinian people, but at the same time make it clear that you don't want people to be supporting Hamas, and that is not tolerable in Europe? How do you find the line? Because lots of Western governments are dealing with the same issue.
Well, first of all, it's a line the pro-Palestine demonstrations have to draw themselves. I'm also for a sovereign state for Palestine and the Palestinian people, and I think that the suffering is horrible, and they have also the right for solidarity and humanitarian aid and so on and so on. But saying that and demonstrating for that does not mean to do anything, any relativism on the terrible slaughtering Hamas has said. So they have to draw a line themselves and say, we want to help the Palestinian people, but we don't accept Hamas. Hamas is not fighting for the Palestinian people, they are fighting to destroy Israel. And this has to be clear all the time.
And why did you feel the need to speak out on this? Should it be Olaf Scholz who is leading this conversation, the German Chancellor? Why is it left to you as Vice Chancellor with all your other ministerial responsibilities to make these points?
Well, he does it all the time, actually. Olaf Scholz, he holds the speeches in the German parliament and in international conferences.
You don't think he's getting the message wrong at all?
No, he's doing a great job, as a lot of leaders of the world are now doing a great job trying to ease the situation. Right now, Secretary Blinken is again in Israel, and I know that the U.S. government, President Biden and Secretary Blinken, they are really working hard with the Israeli government, as we do, to give them support in this difficult situation for Israel, but also making clear that also Israel has to stick to the rules of international law.
Thinking about U.S. foreign policy, you mentioned Anthony Blinken travelling just there. There might be concern in parts of Europe about funding for Ukraine in the context of Israel and Hamas. Are you concerned in Germany that funding for Ukraine will be caught up in U.S. domestic politics?
No, I'm sure that U.S. will stick to the promises they have made, as Europe and Germany has done, and we have to stick to the promises. Otherwise, that was all only words. And of course, I'm concerned as the war in Ukraine is ongoing, and as we are talking here, also people are dying there, and the next winter is coming. So the situation is all but easy. But we gave them all support and promised all support, and we have to stick to that. And I'm sure that the U.S. government, the U.S. people, and the German and European people will do that.
But war in Ukraine, clearly a humanitarian disaster, but also had an impact on German business, on the costs of energy, and led to a lot of transformation in the German energy market. You've had to change policy on coal as a result. But recently, your former minister, Finance Minister Christian Lindner, said this week that Germany should end dreams of phasing out coal-fired power in 2030. Do you share that view?
Well, first of all, we had to change the politics on gas, natural gas, because half of our gas supply was coming from Russia, and that we don't want to have anymore, and we don't get anymore because Putin first stopped the gas supply, and then now the pipelines are destroyed, as I guess also everyone knows. Therefore, we needed a little bit more coal. We let the coal power plants a little bit more longer in the system, but now the security issue is more or less solved. We were able to build up LNG terminals with incredible speed. We have now 3 operational and 3 more coming over the winter, and then we would have enough gas to go back to plan A, and therefore...
So you can phase out coal by 2030?
Yes, absolutely, yes.
That is the plan?
Yes.
And so no more winters reliant on coal, or how many more winters reliant on coal, or using coal?
It's a phase out, so every 1.5 years some coal power plants will go out of order, and the most important decision was made on the European level. We increased the CO2 taxation we have on CO2. That means that the market will solve the problem. It won't. I think after 2030 you won't earn money with coal power plants anymore.
On another theme in energy, Siemens Energy, I know you're in conversation with them. There might be limitations to what you can say about loan guarantees. But can you see any situation in which the German government puts cash into Siemens Energy or takes a stake in Siemens Energy? Is that part of the conversation?
It's not about cash. Siemens Energy.
Are those things ruled out?
And first of all, it's important to understand that this is not a political problem, others than Uniper that was reliable on Russian gas, and suddenly the war, and then the gas was gone. Or Lufthansa, for example, and the COVID-19 crisis happened. So this had nothing to do with the companies in itself. Other here, they have a self-made problem that they bought a Spanish wind turbine company, Gamesa, and the turbines are not working properly. So this is just a problem in itself. On the other hand, Siemens Energy has a huge amount of orders, 100 and more billion of orders are in their portfolio. So they don't need cash. They need a guarantee that they can do the work.
Okay.
And it's different, and we are in talks with everyone to ease also or to solve these situations.
Okay, let me turn to German politics. You've been quite outspoken. We talked about what you've been saying on Israel, Hamas recently, but on the economic side, you've been outspoken criticising some of the coalition policies, a coalition that you are a part of. I wonder why what are you trying to achieve by criticising some of the policies around subsidies, a lack of investment in renewables, those kinds of things?
Well, I was not criticizing our coalition as I am part of our coalition. I was just raising the question that if all the rules we have adopted in the past 30 years are fitting to the world order, I can say, as we find it now. So China is a friendly open market, cheap gas from Russia, no wars anywhere. We can save money by not investing in our military capacities. This was basically the mindset of the past 3 decades. And this is, I mean, the gas from Russia is gone. China is a competitioner, to say the least. And we see that wars are happening again. So, and then to ask if our budget rules, our European rules, our federal system is adjusted right, I think is necessary.
It just sounded to some as if you were providing more of an opposition than being part of the coalition. Is this actually something to do with campaigning for 2025? Are we already there yet? Is that what we're seeing in German politics?
Not at all, and it has something to do with thinking. And I think thinking should be allowed in politics.
And Christian Lindner, has he given his reaction to your comments?
I haven't seen any reaction.
No, has he given any reaction? Is he?
Well, we stick to the rules we have given our coalition in when we started it, and this is also what I intend to do. We stick to the rules, or we change them together. But this is not going to happen, I guess, not in the budget. But still, this cannot mean that it's forbidden to think about the situation as we face it. I mean, it would be the same in the US. You are raising your budget all the time, or try to raise it, and then you have your US internal problems and debates. And but there seems to be a demand for more money. And this is everywhere the case. If the goods from China are very, very cheap and we won't buy them in the critical fields of technique and so on, then we have to produce them ourselves. Then they are more expensive. Then we have to ask the question, who's going to pay for that? So this is obvious, and this is an objective question, and this was the only one I was raising.
Vice Chancellor, thank you very much. Germany's Vice Chancellor Robert Habeck and Minister for Economic Affairs and Climate Action. Manus, Danny, back to you.
Anna, great conversation. That's Anna Edwards with the German Vice Chancellor Robert Habeck. Breaking news on Bloomberg. Saudi splashing the cash again, we understand, ready to make a $5 billion investment. This time in the Indian Cricket League. Danny and I will talk cricket and sport in just a moment. Of course, we'll talk strategy as well. We won't leave you bereft at 5:30 in New York. We've got Kareem Cheddid, Head of Investment Strategy. Where do you want to take your risk on the morning after Apple?
part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger. But obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we can deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California in San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Wall Street's rally bolsters sentiment as investors look for further conviction on the Fed's rate path. Our focus now turns to U.S. jobs report, which may show hiring cooled in October. And an unusually swift verdict. It only took a jury less than 5 hours to find Sam Bankman-Fried guilty, of all 7 counts of fraud and conspiracy. And Apple warns of a sluggish holiday quarter ahead. Share slump as CEO Tim Cook struggles to assure Wall Street that iPhone demand remains strong in China. Some of that Apple pre-market trade is raining on the parade of this big old equity rally we saw yesterday. The best day for stocks since April. We're headed towards the best week for this equity market since November, but we are down on the pre-market trade. 0.5% for S&P 500 futures, NASDAQ just less than 0.5%. Again, it does seem to be Apple dragging us there, down more than 3% so far this morning. European stocks having a better go of it, Manus. European equities up about 0.2%. They have SocGen even rallying today. A miss on their earnings. Profit was hurt, made some wrong way bets on things like interest rates, but even so, they're up, not tons, but about 0.5% there too. But overall, Manus, it's my fun fact of the day, so of course I gotta say it again. It's the first time since January that all the American equity indexes and TLT have rallied more than 1.5%.
And for all our viewers out there who want the Excel spreadsheet, contact Danny on the IB. That's what she does in her spare time. Well done. Fact of the day. Don't worry, I will rob that in a moment. Now, the bottom line is for the bond market. I mean, we've seen a 30-bip range in 10-year government bond yields this week. You're just seeing ever such a small incremental rise this morning. The bottom line for the bond market, I mean, the gilt market dropped by 18 basis points yesterday. It's ticking up by 1. Let's not get emotional. But the gilt market essentially moved and gave heft to everything else because the bond market does not believe the higher for an enduring longer period of time. The bond market is convinced that central banks are going to break something, and in breaking something, they're going to have to cut rates more aggressively than you and I think. And with that in mind, that is why you're seeing this downward trajectory in yield in the US and in the United Kingdom. Bailey pushing back, saying we are going to be sufficiently restrictive for sufficiently long. And he pushed back very aggressively with Guy Johnson. If the market thinks we're going to cut, you're wrong. I want to push back against that. So you need to understand whether you believe that you're an enduring pause or that the central bankers are wrong. I'm talking about Lagarde, I'm talking about Bailey, and I'm talking about Powell. The dollar index itself is down ever so slightly this morning, but we have the biggest weekly loss in 3 months. It's got indigestion. I like what Kit Dukes had to say, Danny. The dollar is potentially showing signs of indigestion and doubt. And that, Ms. Berger, is your big risk for the supply coming down the pike in the United States of America and those bond yields. Danny?
Well, I mean, to some degree, you got to hope the supply shakes things up because, I mean, that curve flattener yesterday is so painful for everyone out there who literally just came out and said it's time to get into steepeners. It is very 2023 for a consensus to come out and then swiftly be punished.
And to be fair to you, it was your math. It's the biggest curve flattener since March. She did that on an Excel spreadsheet this morning. So if you think my divinity comes for free, it comes from her. Danny, good morning.
I clearly have too much time, free time in the mornings, man.
Far too much time.
Yeah, fair enough. All right. I mean, I think I spent it okay. But, okay, Manus, let's get to the stock futures this morning, because as I pointed out, they are pairing some of those gains after a strong day yesterday, best day since April. Our next guest, he's been on the road. He's been talking to clients in 10 different countries. It is BlackRock's Kareem Chedid, and he writes that after those conversations, client consensus is positioned for recession this year through going underweight equities and overweight duration. Kareem joins us now. He's the head of investment strategy for iShares EMEA at BlackRock. Kareem, great to see you. Maybe as to what I was just saying to Manus, I mean, yesterday was painful for someone whose positions were that underweight equities and overweight duration. So is that kind of client consensus unwinding now?
Yeah, I mean, I agree with your comments, Danny. This year, trend has not been your friend. You know, you can't trust the trend because it does switch around, which means that the analysis of flows and positioning, which I spend a lot of time doing, is crucial in this environment to find out where the crowded trades are, and that's why I look at ETF flows in that through that lens. But I think that yeah, we have picked up a couple of consensus areas, whether it's going long duration, perhaps a little bit too soon, although over the past couple of days, obviously that rally we've seen in bonds would have been in that favorable for those in that position. But I think it's gone a little bit too far, and if we take a step back and we think about what's happened this week across all the central banks, we heard one message loud and clear, which is high rates are here to stay. So we need to take that into consideration as we look at some of this market pricing, perhaps getting a little bit ahead of itself.
This is one of those magic moments in television. I'm going to let Danny continue the conversation because I've lost all communication. So I'll leave that with you, with Danny and Kareem. I'll be back in just a moment. The magic of TV.
Manus is the voice of God. See, we can't see him, but we can hear him. He's around there somewhere. Okay, so that's really interesting. But, I mean, I guess the point that we're also hearing from central banks isn't just higher for longer, but they're not ready to talk about cuts. We heard that from Lagarde. We heard that from Andrew Bailey yesterday. But this is a market that is primed for cuts in 2024. Are we going to need to see an unwinding of that position, too? Do we trust the central bankers or trust some of the deteriorating data?
Well, that's where we need to look at the data and consider, the inflation and growth trade-off, which is, the good thing is that it's not new. We've been following this for the past couple of years as we look at some of the pandemic trends unwinding, with the services inflation coming down, goods, but still sticky, goods inflation having already unwound. The question is, how much are central banks going to keep focused on those inflation targets? And I think what we've heard from them is that they will still focus on them. So I would believe that message, and I would lean against some of the big market moves we've seen in the past week. If I look at the stock markets for a second, it's really the long duration stuff that have really outperformed over the past couple of days. Even unprofitable small tech. It's not the high quality stocks. It's the really long duration segments of the market. I'm not sure I'm ready to lean into that trade yet.
Kareem, I think I have good news. I think Manus is no longer just a voice. I think he's a face now too. Is that right, Manus?
I've come back to life. You thought you'd escape, Kareem. No, not a chance. Not a chance. Yeah. Let's pick up on that theme, because that's very much what I was saying when I was looking at the bond market, which was Bailey was pushing back. Of course, the accusation is that Bailey's going to be the highest for the very longest in the UK. But if you look at that repricing in duration, the bond market is saying, central banks, you are wrong. You're breaking something, and you're going to have to cut quite aggressively next year. I think that's the message for me that the bond market has given me this week. How do you see that narrative? Do you think it's just too soon to buy that narrative that they're going to be aggressive and higher for longer and on the top of Table Mountain for a lot longer?
Yeah, so I do think there's some regional nuance to that question. You spoke about the UK, and we turned overweight on UK gilts from a tactical view perspective. So we were ready to extend that duration view over the past couple of months for precisely this reason, which is that markets had priced in a pretty high rate for longer path in the UK in a way that they hadn't done in the US. So this rally that we've been seeing in gilts, this big move towards pricing no rate cuts on the horizon to pricing 2 cuts by end of 2024, that's something that has been favorable in terms of the view that we've held. It's in line with the view that we've held. The question is, has it gone too far? And that's something we're debating live, but I think that regional nuance is important to bear in mind, especially because in the UK the damage is greater. In the US we have had some cushion from savings that have kept consumers quite.
And I think to be fair,
strong,
the structure, the interest rate structured exposure, both of domestic, let's say of retail people like Danny and myself and yourself buying a home here is structurally different to it is in the UK. We were both, I mean, obviously we've got SocGen numbers this morning. It's interesting. It's had a fairly tough time since the new CEO took over. But can we ask you about your view on US regional banks? It was a source of angst and great global angst in the springtime. But Bill Gross wrote this overnight. I mean, he rocked the bond market last week. Now he's rocking regional banks. Regional bank falling knife has hit a bottom. I'm buying Trust, Citizens, KeyBank, First Horizon. Treasury yield picture still uncertain. The best strategy is to invest in the 210 curve, continue to disinvert, and to buy 2s, sell 10s in duration neutral. I mean, we could go on, but I want to focus on really on his bank call. How do you look at banking at the moment? The KBW has had a very tough time. SocGen's had their numbers out. Things are different here in the US. Just the nuances for us.
Yeah, I think nuance is the way forward, and selectivity is the way forward in stocks in an environment where the macro, where high rates are here for longer, is not your friend. And that selectivity goes at sector level, something we've seen loud and clear in the ETF flows across sectors, with a clear preference for European banks. That has been a key preference for investors, expressing it through ETF flows in that space, and also sectors like healthcare and energy. In the US, that preference for US banks has not been as loud. I think there's a higher conviction that European banks' revenues are more cushioned, and you're also seeing it in the earnings season. The European banks have been a standout performer in the earnings season that we're watching right now, more than the US.
Okay. Kareem, thank you so much for joining us this morning. Really appreciate your time. That's Kareem Chedid of BlackRock. All right, Manus, I have a number I want to talk about. It is $5 billion. That is the amount that Saudi has said to eye in the Indian Cricket League. That would value it at $30 billion. So there you go, Manus. Another day, another headline crossing of a potential Saudi sport investment.
Yeah, I mean, this builds on the narrative, doesn't it, Danny? Which is, if you can't bring in the star footballers like Ronaldo, etc. The view is, of course, you can bring in the footballers into Saudi Arabia, but will people watch more matches? Here we are with cricket. We've got a bid out there for the PGA. Of course, the PGA have begun a formal process of reviewing other investors into their business. But this is India. I mean, this is a $30 billion Indian Cricket League. That's just monster. And in terms of the audience, is the physical audience.
Yeah, it's monster, but it is interesting because Bloomberg spoke with Ben Stokes. He's the captain of the England cricket team, as I know very well as a recent newly minted Brit myself. Before this deal, he had even said you can't compete with money, especially the money that Saudi Arabia is throwing around to certain people. So there almost seems to be this idea in the cricket community, not just that they'll invest in international cricket, but maybe they'll try to bring it back home to Saudi too.
Yeah, I mean, it's going to be interesting to see how the political response in that comes through. From Narendra Modi. Of course, MBS is very focused on this entire sports narrative destination, Saudi Arabia. Well, we'll keep an eye on that story. Where's Greg Tanner when you need him for the sports narrative, yeah? No, he's on a beach somewhere.
Does he do cricket?
No, he's on a beach somewhere, probably on the Palm, having a glorious Friday afternoon and a couple of caprijinas. We're going to talk Apple next. There's a thought for you on a Friday morning at 5:41 a.m. A caprija somewhere in the sun. Apple warns the holiday season may not be just so happy as it struggles to get the sales out the door. How enduring will the slowdown be? Right here on Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behavior was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
We're seeing a very uneven economic environment right now, but we do expect that there actually will be an economic slowdown and that organizations are going to have to manage that. This is not the go-go era of 5-10 years ago where we can expect 30-40% growth in any category in perpetuity. We are going to see some slowdown. We expect to see some slowdown in cloud. It has not happened yet as a result of the big AI boom that we're experiencing, but even that has its limits in the short term.
That was Maribel Lopez, founder, principal analyst at Lopez Research, speaking about the slowdown in tech. And shares in Apple, they're falling pre-market this morning, disappointing holiday outlook, and a slower sales number in China. Stock down 3.33%. Mandeep Singh, Bloomberg Intelligence senior global tech analyst. What a lovely line from Maribel. It's not the go-go time that we had from 20 years ago. And of course, Apple, it's 4 quarters in a row of disappointment. They haven't seen that since 20 years ago. So how lack of go-go has Apple got? Or am I mistaken?
No, I mean, if you look at their numbers, the top line clearly hasn't delivered, and there is that sentiment that, you know, top line will remain flat for a while, but they keep delivering double-digit EPS growth, and that's a combination of price increases, share buybacks, and look, this company knows how to pull the levers. At the end of the day, they own the distribution when it comes to, you know, internet and everything that we do.
And Mandeep, Danny here in London, great to speak with you. This was also supposed to be the time, right, that we saw weakness in iPhone China sales with all those iPhone bans for state companies and for governments. We didn't see that, though. Instead, it was other products. What do you make of that mix of product sales for Apple in China?
Yeah, look, I think the China number was about 2 billion below consensus. So clearly there is that soft demand aspect with regards to China. And some of that could be due to the ban and, you know, the other things that we have seen play out in the region. But iPhone still, you know, the 15 cycle isn't playing out as big of an upgrade that we expected, simply because I think what consumers are finding is the feature difference isn't that big. And so that, to me, is somewhat of a concern. But with Apple, time and again, we have seen, you know, even if they will have 4 to 5 quarters, they will have a big upgrade cycle. And that, I think, is probably delayed to next year.
What's the big, I mean, we'll move on from Apple in just a second. What's my biggest risk with Apple? And what could be the biggest, absolute flabbergasting thing that you just caught that goes like that and really puffs something out of nowhere?
Yeah, so the biggest risk is the services growth. And we know within that services growth is the $20 billion in payments coming from Google's to Apple in terms of being the default. Right. That is a big chunk of that. And if something happens to that, clearly that services line isn't going to grow. The biggest upside catalyst could be just the upgrade cycle. We know every large tech company is focusing on Gen AI. They're focusing more on the Gen AI compute. When you look at Amazon, Microsoft, and Google, Apple can have Gen AI on their chips within the devices. That could drive a big refresh cycle across their product lineup, and also the Vision Pro. Don't take that out. That's coming in 2024, and that could be huge in terms of a new category.
Mandeep, now that we have all of these tech earnings in the bag, is there any clear leader when it comes to some of the AI progress? Is there anyone who has such a head start lead here that it seems it could be sustainable?
I mean, right now it's clearly Microsoft because they have quantified that Gen AI tailwind. They said it's going to be 3 percentage points of growth on the Azure side. And we know, right now Gen AI investments are being made for training these large language models. That's why you need the GPU compute. Microsoft has a clear lead in that front. But, when you look at Google and Amazon, both of them are well-positioned on the cloud side. It's just Microsoft has a double tailwind, if I can use that term, from compute as well as Copilot launches. They just launched their 365 Copilot, so that's going to add to more incremental revenue.
We caught up last week when I was on surveillance. We talked a little bit about margin. Who's the margin blockbuster in this? If our audience tune in this morning and go, who's going to hold their margins the best? Who do you think that is at the end of this reporting season?
Well, so I think Apple clearly is showing they can deliver on the margin front. They had the highest gross margin in a quarter where revenue was flat, and that was partially due to the fact that they can pass on the price increases on everything that they sell, whether it's the product side, the hardware, as well as the services. They raise prices for all their services.
Okay, as you say, they're in control of that supply system. So let's see whether they can continue to squeeze the margin. There you go. Apple is a bit lighter on its feet this morning, down to 3 1/3%. Mandeep Singh, our resident Bloomberg Intelligence. We're going to give you a quick snapshot of the bond market. It was the UK market that dropped by 18 basis points yesterday. Bailey pushed back on the narrative that he was going to cut rates next year. You've just seen a little bit of reprieve in 10-year government bond yields this morning. US Treasuries also trading a little bit higher. We've just had BlackRock with us saying, do not be convinced that this monster drop in yield is something that is going to continue and endure. You may have some flashbacks. The spread between Germany and Italy also compresses ever so slightly to 188 basis points. That spread is the one to watch. Good morning from New York and London on Bloomberg Brief.
Maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, businesses, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Welcome back to Bloomberg Brief. I'm Danny Berger in London. Manish Krani is in New York. Let's get you set up for your trading day with a look at what's ahead. The main event is the U.S. payrolls report that will hit at 8:30 a.m. Eastern. The survey is for 180,000 jobs have been added in the month of October. Then we're going to get some more data. 9:45, we're going to get ISM services and PMI. PMI hits at 9:45, ISM at 10 a.m. And don't miss our exclusive interview with Atlanta Fed President Raphael Bostic. That's at 3:30 p.m. Vice Chair for Supervision Michael Barr and Minneapolis Fed President Neil Kashkari will also be speaking today as well. Manis.
Well, let's keep an eye on some of these stocks. So you got SocGen trading. Of course, this is Slavomir Krupa. He's been sat in the seat for 6 months. This is the CEO. He stepped up. He was the head of investment banking when he joined you and I, Danny. He talked about massive bonuses. They never let us speak to him again. SocGen's up despite the drop in the numbers, the earnings way. The results failed to shake off the negative narrative. And Maersk, of course, there as well, down 10%. They're set to cut 10,000 jobs. Freight rates are under pressure as well as profitability. I think a lot of those job cuts have already been announced, Danny.
Yeah, and I should say it's not Maersk only cutting jobs. It's also NIO. They're the Chinese EV maker. Their shares, though, rose. The CEO saying that they're going to cut about 10% of its staff. Okay, so this is a Chinese EV maker, but the point still stands, Manis. We are hearing just this anecdotal evidence, at least now, of jobs coming in, at least when it comes to things like EV and industrials. We're going to get jobs today. The survey is for 180. The whisper number, though, is 200,000. So a little bit stronger on that front.
I'm not sure what time the whisper function closes out on Bloomberg. I think the interesting thing is going to be, you know, that boom that you had in those services sectors like leisure and hospitality. Does that fade as we come to the end of revenge tourism? We were talking about this yesterday, you know, that revenge spending, revenge tourism narrative may be coming to an end. Unemployment rate 3.9%. Again, in the 12-month basis, I found a fact, unlike you, I did not build an Excel spreadsheet this morning because my time's a bit more compressed than yours. But that's risen by 0.43 in the past 12 months. So it's incrementally rising. What Danny Berger does on Friday mornings, she builds spreadsheets and, you know, just delves into the math. Good morning.
I promise you that's not how I spend my Friday nights. If that's any comfort, I leave the spreadsheet building for the morning. All right, that's it for us on Brief. Surveillance, that's up ahead.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
Can't have lasting prosperity if you don't get price stability first.
People are looking for opportunities to come back into equities.
The outlook is for equities to be rallying into year-end.
Corporations are doing better navigating very tough environments.
We've kind of maybe been swept up in this optimism, but no matter what, that's got to slow over the course of the next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Mic test 1 2 1 2. It still works, TK.
That's good.
This is good.
This?
Just practice, Bramo. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market slightly negative on the session. This equity market is up big time on the week. The S&P 500 TK up close to 5% so far over the previous 4 days.
It's the way it's up big, John. While you were gone and just before the Fed meeting, like at a 1:58, the blinking on the Bloomberg terminal, the red and green, I have never seen a market get out front with a fervor before that announcement and before that press conference.
How many times am I going to hear you say before you were gone?
I think before 6:05,
We can get 5 more of those in?
Yeah.
5 more in?
We'll squeeze them in.
You take time off sick, and every time you tune in, I hear you say it's a good and beautiful thing, and TK look down the camera and say, John's on assignment. John's on assignment.
John's on vacation. I am so glad to have you back.
Thank you.
Welcome.
The voice is in recovery mode, so bear with me at home. We'll try and get through this together. Apple on deck with earnings after the close just yesterday. Apple in the pre-market, TK. A little bit softer here for the stock. I know where you're going with your commentary this morning, so I'll offer up the opposing view.
Please.
4 quarters of no growth, okay?
Right.
Problems with the iPhone, struggles in China. You're going to go to margins, you're going to talk about record service revenue, and I'm sure you're going to adjust things based on foreign exchange as well. Am I right?
We are completely addicted to analyzing companies, and our first guest here is actually expert on this today and folding in the way we use 4 accounting statements with economics. And the answer is we are addicted to revenue and somewhere down the income statement dynamics. Cupertino is running this thing for profit. They had a record third quarter gross margin with massive cash generation.
A lot of positives. One of the biggest negatives, though, is 1/5 of their sales in China. We didn't even mention the China factor.
Valid point.
The fact that it came in so much lower than expectations, the political headwinds, the uncertainty of whether this is a lack of demand just from cautious consumers in China, or whether this is actual true competition from Huawei in a new way. This, to me, is one of the biggest existential risks for the company.
It's not an existential risk. It's what we call competition. And we'll see. They've had the competition before.
That's existential.
And get the government angle in all that, but I would notice that, you know, in many of the paragraphs I read, we're parsing 89.x billion versus 89.y billion. They're not doing that in Cupertino. What they're doing is they're looking at the operating leverage of the system. And as I said yesterday, John, from the pandemic, they're up 47% in sales, and they're up 71% in free cash flow.
Wasn't this the objective for the last decade or so for this company?
Yes.
They knew what was happening with the iPhone business, and that ultimately they'd transition to more services revenue.
Up 16%.
And that maybe margins could improve from there, TK, and isn't that what we're seeing?
The margins is what the adults look at. They're looking down the income statement at a comparison of, say, EBITDA to revenue, and the answer is they're steering it in the right direction, is a cash machine.
To be fair, though, for the Bears, I do understand the confusion. Bramo, if we'd sat here maybe 12 months ago and I said next 4 quarters, forget it, no growth, and in between you're going to have a stunning sell-off in the Treasury market and yields are going to fly, and then you'd have to listen in the same breath to someone saying, yeah, but I think the stock's going to be 30% higher from here.
But that's the issue, right? It's how far we've gone and how far this is baking in future earnings and revenues, and now there's a big question mark. How much can China be the driver of that at a time where their net revenue keeps decreasing?
It's
and
terrible.
It's unclear the competition.
I mean, Cook is slacking off. I mean, they've only made 25% per year for the last decade.
I knew where you'd began with this. Haven't you already bought the new phone?
No, I don't have the new phone. I still owe money. I still owe money on the old phone.
I think we know where this is going.
I called them up and I said, you know, I'm Tom Keene. Don't I get a new phone? And they said, hell no.
Does that work when you call up and say, I'm Tom Keene? Thanks for being with us. Let's get to the price action. Your S&P 500, slightly softer. It is payrolls Friday and we haven't talked about it yet. Your estimate, 180,000. A previous number, a blowout, 336. Yields this week down hard on a 10-year right now, 466.16. In the equity market, Tom, equity's up and up big time.
Yeah, it's the way they're up. It's just a massive bid on there, a massive short cover. I think we can all agree to that. But the huge question is now what with the VIX at 15.71. As I showed yesterday, I think we've got it again. These banners on radio are just absolutely phenomenal. The VIX from a 13 level out, OMG 21. You would have thought we were at a VIX of 30 at 21.71. Fear, blood in the streets, Bramo fired up, and we're back to 15.80.
To be clear, these banners don't work on TV either, just for the record.
No, but they're there, you know.
2 Mondays ago, on a 10-year yield, 5.0187%. Lisa this morning, 466.16.
Which brings me very much to what I'm watching for U.S. payrolls, which do come out, non-farm payrolls, at 8:30 a.m. Everyone's looking for the number to be about half of what it was last month. 157,000 is where Bloomberg Economics puts it. The whisper number is around 200,000. I'm watching the response in the 10-year yield. To me, that's more important, arguably, than what we see with respect to the actual number. Do we see a new balance of risks with respect to a sell-off continuing after the reprieve that we got over the past couple of weeks? Today, Secretary of State Antony Blinken does head to Israel. He does have a press conference at 8 a.m. Arguably, what's more important to me, what I'm watching, is that the head of Hezbollah is going to be speaking in Lebanon around 9 a.m. Eastern for the first time since October 7th, and people are looking to see whether he indicates that they are going to enter the war. And today, Fed Speak is back. Tom, you'll be happy to know. We have Fed Vice Chair for Supervision, Michael Barr, who I know you're actually very curious to hear about, considering
Michael Barr is the one I want to hear from.
Well, you'll hear from him twice. Minneapolis Fed President Neil Kashkari, and then the key event, 3:30 p.m., Atlanta Fed President Raphael Bostic with our own Michael McKee.
Take a break. I just don't think we need it today. I really don't. Wasn't it message received from Chairman Powell?
Well, was it message received? Was this what he wanted? Did he want to juice some sort of rally in the equity market, in the bond market?
I don't think he wanted
he's
that.
Going in. He's on the phone. He's on the phone to Fidelity or Schwab. Can you go long Apple, please?
So if they want to walk it back, maybe they could start saying the market received it the wrong way, and maybe we could see some kind of reaction.
I got a call from Rachel yesterday, our manager.
Rachel who?
Our manager. She said, "You sure you want to come back? You know, you can stay off through the weekend and come back on Monday." Miss this. And miss this, please. Steve Whiting, Chief Investment Strategist and Chief Economist at Citi Global.
Whiting was tearing up.
Joined us now. Steve, good morning.
Good morning.
What are you and the team looking for on payrolls later?
Look, I think it's about half of what it was last month. Let's just remember, throw out the COVID period shutdown and the reopening. Just in the last year and a half or so, the range on employment data, even after the revisions, has been from 105,000 to 904,000 on these monthly numbers. And you can see there are deviations from the trend. The trend has been moderating. Here we have 30,000 less. Those will be back, the strikers, in the November report. There hasn't been any collapse in the labor market. It's been a lot stronger than we had thought going into this, and yet we have still managed to take inflation down from 9 to 3.5. So that's good news, and I think there's some acknowledgement that you heard from Chairman Powell that, if everything is overheating, why is the employment cost index decelerating? How did we manage all of this disinflation? How did we manage to get supply and demand to come together in somewhat better balance without knocking the economy into a collapse?
What does bad news look like today?
Bad news today would be, some job number like 400,000 that
lots
would
of jobs,
reignite, at least for
higher wages,
for the financial market.
America.
Yeah, exactly.
Yeah, I'll tell you, for the financial markets, again, for the economy, the more the better.
So we live in this upside down world still in financial markets.
Again, when the Fed is saying we'll drop the economy into a contraction if we can't align supply and demand, we must moderate. That's what financial markets need.
I'm looking here at productivity yesterday, and I understand off 2 quarters you can't really take a productivity snapshot, but Julia Coronato's led the way on this. Are we completely misjudging the technology overlay and the productivity it leads to this more buoyant American jobs report?
Well, I think that this is a really big issue, and it's going to play out over the next couple of years. Our labor market last year outgrew the economy by the most since 1974. The labor market has been outperforming the economy. The economy has been, there's all sorts of readings below the surface. 12 months of contraction in manufacturing. Very little. Housing, single-family housing constructions collapsed over 20%. And the labor market has been growing very strongly. So I think we're going to reverse that trend. We're going to start to see that cyclical industries come to grips. GDP growth will firm, not quickly, but into 2025, and the labor market's going to stall. And that's going to mean an improvement in corporate profits. It's not V-shaped. It's not collapse recovery that everybody, can clearly see. But I think beneath the surface, we're going to see, again, that profits are going to outperform labor if we look at the next 2 years. And that data point, is what it looks like.
So soft landing. You're basically in that camp.
No, I think I would say this. Do we need, again, massive unemployment to stabilize inflation? I say the answer is no. But a couple of years of below-trend economic growth and stalling out future job gains, is not exactly paradise.
Well, but the problem that I guess a lot of people in markets are grappling with is this is a slow-moving, unknown story of what will be, and markets are bouncing around, and I'm talking about the 10-year Treasury yield at an astronomical levels. The fact that we've gone 35 basis points in a couple weeks based on not a lot of new news gives you a sense of that. So where is the bias in terms of the violent reaction in benchmark yields and stocks today? Is it the upside surprise, or is it a downside surprise that turbocharged the rally?
If you take a look, a lot of investors, if they are really traders, are short stocks and bonds together. There has been, a negative view of how much further tightening we will need, how much the economy must suffer to get inflation down. And we're biased to see a little bit of improvement. Now, we just had a nice big rally in the bond market. It's not going to be a period where we're going back, well, suddenly, rates should be 2 again and growth should take off and inflation 0. It's not going to be that environment. But there's been a tremendous amount of negativity, and we're finding, again, enough reason for us to move a little bit more favorably. For the first time really since 2020, to incrementally add some risk in the equity market and say that this bond yield, by the way, global bond yields ex-US, or at least developed market bond yields ex-US, 3.2%. So there's capacity here with 5.5% investment grade bond yields. That's governments and corporates together, for us outside the United States to really put some money to work here.
Jane Fraser wants to know what to do with her portfolio this week, and Whitey's going to tell her to take the cash and buy stocks, right? Is that the short answer here?
A little more.
A little more?
And special. Well, look, I'll tell you, it's not just, large cap tech. We need to outperform whoever's going to be, a little more there.
Regional banks.
Well,
all in.
You want to nibble at regional banks?
40-year lows in bank stocks on a relative basis. interesting, but we're taking a lower risk approach on that.
Okay.
I would tell you small cap growth stocks, mid cap growth stocks, 15 times trailing earnings. Now, the long-term history, 25-year history, is 21 times. So I'm just rounding a little bit, but that's trailing EPS on the piece of the small and mid-cap stocks.
It's TV. I don't expect direct answers. Don't worry. Carry on, please.
You wanted some specific advice here.
It's Friday.
But think about companies that are not leveraged, that are not trillion-dollar companies. Maybe some of those have been left behind.
Small caps have been battered, absolutely battered since the highs earlier this summer. Steve, thank you. Steve Whiting.
Thank you.
Over at Citi, Global Wealth, fantastic lineup, ready to go a little bit later this morning. Priya Misra, JP Morgan Asset Management coming up in the next hour. Sarah House, Wells Fargo, we'll talk to her about the last mile of that inflation push. Plus, I believe, Lisa, catching up with Alan Zettner at Morgan Stanley a little bit later.
Who is calling for something of a soft landing, a slowdown, sort of something that can accommodate a sort of softening labor market without a big recession and still the disinflation. That to me is the biggest question, right? Do we still see inflation continuing to go down even with the strength that we have?
I just want to get away from this upside-down world we're in.
Good luck.
Treasury yields are lower, the data's a little bit softer, the Fed's backing away from hiking, and banks are rallying.
Yeah.
That's not the world that was described to us 12 months ago.
John, it's a different world since you've been gone.
It's a whole new world, TK.
It's a whole new world.
Who's
It's a whole new world.
Let's go.
Tom, you've got it. It's Steve, your mic's off. Doesn't work.
Season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power. We're going to make more money. We're going to make more money. And we're going to make more money.
We're making bank. And I think that is what we can take away.
Bloomberg Television and Radio. Context changes everything.
From New York City.
From London and Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Last month's jobs report caught everyone off guard.
Major upside surprise on the headline number.
Considerably stronger than people thought.
Almost twice as much as what the expectation was.
Today, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Rates are going to have to stay higher for longer, potentially even go higher.
Can there be lasting damage here?
Those cracks are starting to form.
The October jobs report, today on Bloomberg Television and Radio.
The supplemental request that we submitted contains 4 really critical national security urgent needs. Israel, Ukraine, our Indo-Pacific resourcing, particularly when it comes to manufacturing of submarines, and of course border security. All 4 are important. The president wants to see all of them honored, all of them acted on by Congress, all of them together. We wouldn't have submitted it that way if we didn't believe that they all weren't important and should be acted on together. The president would veto an only Israel bill. I think that we've made that clear.
It's the push for more aid. That's John Kirby there, the U.S. National Security Council spokesman. Secretary Blinken speaking from Tel Aviv a little bit later this morning, a couple of hours from now. If you are just joining us this morning, good morning to you all. Check out the price action on the S&P 500, heading towards a big week of gains, the biggest weekly gain potentially of the year so far. We're down just a touch, negative 0.1% on the S&P 500. Yields coming in just a touch as well, down aggressively on the week on a 10-year maturity. The 10-year right now, Tom, 465.54.
Yeah, the 10-year came in, but just as importantly, John, the inflation-adjusted yield came in off this new accommodation, away from restrictive, away from, some would say, market-making, super restrictive. You had a 10-year real yield, and the answer is 2.26%. While you were gone, that got as high as 2.50%. So the inflation-adjusted yield is game-changing for all of America.
Is this a drinking game?
Once a segment.
It's a drinking
at
game.
least.
We've gone
Yeah.
shot.
Exactly.
Shot. Are we playing that all morning?
Tank.
I'm already
Tank. Okay. Okay. Good to know. TK, I think the Treasury market bulls had some good news this week, didn't they? Wasn't just Chairman Powell. Wasn't just the data. Bramo, it was also the amount of Treasury supply we won't be getting going into year-end.
To me, this was the story, and everything else was basically gravy on top of it. And this showed that the Treasury is very attuned to what's going on in market dynamics, and they're going to cater to them. Are they playing the market? I don't know. I mean, yesterday, Janet Yellen really pushed back on the idea that they didn't extend the maturity, saying they're actually longer duration than they have been in decades. But to me, what this highlights is this Treasury market, this Treasury Department does not want to see dysfunctional treasuries.
John, it's real simple. Can we just say it clearly? Tom was wrong. Bramo nailed this with the refunding.
Bramo often does. Less. You didn't think it mattered this week?
I didn't think it mattered. I'm like, big so what?
You were lonely.
And
Lots of people did.
Lined up.
Lots of people did.
All the pros lined up behind the toxic brew at Halloween.
Easy to say that you're wrong. Is Secretary Yellen wrong as well? To come out and sit down with Peggy Collins in Washington, D.C. and basically say that this sell-off this year has nothing to do with additional supply, when we've basically heard from the IMF, it did. We've also heard from Lael Brainerd, National Economic Council Director, speaking to Anne-Marie and Joe Matthew down in Washington, D.C., that to some extent it matters. And I think we can all agree that to some extent it matters, and we can disagree over the extent perhaps, but ultimately that Treasury refunding announcement came in a little lighter, and what happened to bonds?
Massive rally.
So clearly someone thinks it matters outside of Secretary Yellen.
And I would argue that the implicit message here is the Treasury Department understood how much it mattered, which was why they didn't extend some of the purchases and increase them by more in the long run.
Why is the 20 years so different? I mean, seriously.
It's less liquid.
It's just less liquid. Nobody owns it.
It's a smaller portion of bonds outstanding.
John, they all moved. They all had a Bramo.
There is this kink in the curve.
Yeah.
Yes, there is this odd kink in the curve around the 20-year maturity. Okay, just to wrap things up, Tom, stocks down here by about 1/10 of 1% on the S&P.
In Washington, Terry Haynes joins us now, founder of Pangea Policy. Terry, with great cheer for the exhaustion of our Secretary of State, does shuttle diplomacy for Blinken work like shuttle diplomacy worked for Kissinger?
I think it's very different for a couple of reasons. One of which is kind of bubbling under here. Blinken's mission this time, as opposed to the last few times, is designed to try to convince the Israeli government of some kind of pause or humanitarian pause, something like that. And it calls into question a couple of things. It calls into question the degree to which the United States continues to support the current Israeli government. The Biden aides are running around Washington briefing against Netanyahu right now. And secondly, it calls into question whether or not and to what extent the U.S. still supports Israel's war aims in Gaza. And that's a concern. All this also complicates the Israeli aid package, because Congress is not going to pass an Israeli aid package if they don't clearly understand what administration policy is. So we've got a lot of problems here that complicate Blinken's mission.
Terry, unfair question, but I got to go there. It is in the zeitgeist into the weekend as well. Now, you were there with Lord Kitchener and Mark Sykes when they divided up the Middle East after World War I. I understand that. All of a sudden, we're talking about a partition of Gaza. We saw a partition of Vietnam, a partition of Korea. Is that the easy way out here, is whatever this word means, a partition of the Gaza Strip?
Yeah, there's partition and, it's kind of international administration are all the phrases that go together. These are phrases that go back, as you quite rightly point out, to post-World War I League of Nations mandate-style governance. And they tend to bury the harder realities, which are the nature of the terrorist organizations, the nature of their funding, and what sorts of proxies they are, and they tend to bury kind of regional responsibility for the problem, and all those are going to have to be dealt with, and we haven't even started to deal with any of those yet.
Terry, what do you make about the strife within the Republican Party stemming from Senator Tuberville of Alabama, this idea that he will stall with the the confirmation of some of the military promotions at a time of expanding conflict overseas?
Well, I'll give you 2 points about that. One is that it is obviously providing some strife within the military, and at the same time, the senator says directly, and to my knowledge has never been countermanded, that he wants to have a dialogue with the Department of Defense about all this stuff and come to some sort of resolution, and that he's not got it. What I think is going to end up happening is this gets resolved somehow in the defense spending legislation that comes up by about the end of the year. One way or another, this is going to get dealt with in the next 2 months.
There was a resolution that passed the House offering support to Israel, but also tying it to cuts to the IRS, which some have suggested would actually cause a bigger deficit because it would reduce tax revenues that the U.S. government gets. Does this progress the issue or actually push it back in terms of the debate?
Well, 2 things. One is that only in Washington would the IRS get, I'm being rough here, would get $80 billion more dollars and then have it cut by 14 and have that considered by anybody to be a cut in IRS spending. But there you are. Secondly, I think the funding is how Israel aid is funded is almost beside the point. The bigger problem that we have right now really is this. You ran Admiral Kirby in your lead-in. Admiral Kirby says that the administration has 4 priorities and they all need to get dealt with together. Well, these are Biden's priorities. These are Biden's foreign policy. Biden's going to have to get all this stuff done and in a way that is funded properly. And right now, whatever else Secretary Blinken's doing, the apparent change in Biden policy towards Israel is making that more difficult because now Congress doesn't understand exactly what Biden's foreign policy is.
Hey, Terry, great to get your input as always. Terry Haynes there of Pangea Policy. A reference there to Secretary Blinken. TK, he speaks in about 90 minutes' time in Tel Aviv.
It's going to be interesting to see, and as Lisa said, a multiple trip. But, I would say this is a shockingly changed affair that he flies into than it was on the first trip. And it's in real time. And it's like, literally, folks, I'm not sure where we're going to be at 5 p.m. New York time tonight. I'm seeing face-to-face, hand-to-hand combat.
I would agree with that, and I think one of the most underplayed stories and events of today is that 9 a.m. Eastern discussion from Hezbollah's leader, where potentially they could say that they're joining the war or not, and that will mark a key moment in this particular war.
Those comments a few hours away. Moments away, we'll catch up with Sarah House of Wells Fargo, pushing ahead to that payrolls report in a few hours' time. Live from New York City this morning. Good morning.
think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names at the Fed are on Bloomberg.
The economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough.
The bond market has tightened quite considerably. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Nobody covers the Fed like Bloomberg. Context changes everything.
The equity market higher every single day this week, Monday through Thursday. Let's see if it happens on Friday. Your equity market this morning, negative by 0.1% on the S&P 500. On the NASDAQ, what a run so far this week on the NASDAQ 100. Up by more than 5% so far this week, Tom. Just trimming those gains this morning, we're negative a third of 1%.
The search for growth, that's really what the heart of the matter is. David Sowerby, expert on mid-caps, was with us yesterday on Bloomberg Radio. And John, he just said, look, everyone's starving for growth. And it doesn't necessarily have to be Apple, but everybody's got a bad case of growthiness, and where are you going to find it?
This bond market's in search of slower growth. Your 2-year, 10-year, 30-year shaping up as follows. 10-year yields moving all the way back away from 5% to 465.75. Lisa, unchanged this morning, anything but on the week so far.
It's kind of a shocking move. Mohamed El-Arian came out yesterday and was talking about how this is not normal. It should not be normal. This is very disruptive to give people a sense of confidence.
It is disruptive.
At this moment, though, I have to wonder, A, what the positioning is behind this. The technicals start to matter a lot more when you get whipsaw moves like this. But B, does this have anything to do with the data? Or John, to your point, is this entirely the refunding agreement? And that's going to be a tailwind regardless of what we get today at 8:30 a.m.
I looked at a fancy chart, and the 2-year yield, I believe it was, it doesn't even matter what it is now 1, 2, 3, 4, 5 times made this move, John. And the answer is, do we pull back from here to the gloom that we've had recently, or can we actually break through technically to some new regime?
20 basis point move on Wednesday, just kind of mental.
Stunning.
Just big moves. We'll catch up with Mohamed a little bit later this morning, around about 9 a.m. Eastern time, so 2 hours and 30 minutes away. Let's round things up with foreign exchange. The euro shaping up as follows against the dollar, 106.44. Lisa, it doesn't matter what happens, does it? This currency pair is still a bit of a snooze.
It is a bit of a snooze, although we do have a sense that maybe we're going to see a bit of a reprieve, the solid dollar strength. But again, I mean, basically, just tell me the day and I'll say 106.
Average over the last 12 months, 107. 107.43.
Totally
Just
different.
looking at that right now, we're at 106.44. Under surveillance this morning, U.S. Secretary of State Antony Blinken arriving in Tel Aviv, meeting with Israeli Prime Minister Benjamin Netanyahu. This coming after House Republicans passed an aid package tied to cuts in IRS funding. President Biden vowing to veto the bill. The Senate preparing its own package. Lisa, this battle is going to be going through the weekend potentially.
But it leads to a question, A, how are we viewed outside of the U.S.? We keep going back to this, the fact that we cannot get something passed here in the U.S. But the second question is, how far will U.S. involvement go? And this is a reason why I'm so keyed into that speech by the Hezbollah leader today. Where is the trigger point for U.S. troops to get more intimately involved as all of the tankers and the warships are being piled up in the Mediterranean?
I will put it out on Twitter. It is the read of the weekend for everybody on this topic. It is Robert Gates in Foreign Affairs magazine, the former Secretary of Defense, with a primal scream against the isolationists of America. It is without question the read of the moment.
Very cool. Looking forward to that, Tom. Give that a read
question.
over the weekend. 2 hours away from payrolls, and we've hardly talked about it this morning. If you'd like the estimate, here it is. The estimate in our survey calling for a 180,000 print, with a range of calls from Wall Street's biggest banks.
Gapin is.
Bank of America and Mike Gapin looking for 230. Tom, Goldman 195, Morgan Stanley 190, Citi 160. We'll catch up with Wells Fargo in a moment, 175.
Yeah, where's the normal run rate here? And I think most people are going to say 100.
Well, they're hoping it's not 336, which, Bramo, was the previous number.
What I think is going to be the most interesting part of this particular report is, let's say it comes out at 230, the Michael Gapin view of the world. Let's say treasuries don't sell off. Let's say yields stay where they are. What the takeaway for me will be is that the refunding message is going to be, the refunding announcement, I'm just going to keep talking, was really the most important thing of all of this, because it's not really in the responding. I'm talking about the yield to the economic data.
Keep talking.
I'm going to just keep railing through this.
That's the skill set that is required
I'm
to
trying.
operate on this program.
I know, I'm working on it.
Without just crying every single day.
Well, you could do that too, just when, you know, the camera goes off.
Did you see us go down in flames yesterday?
What happened?
When you were
I
in the
missed it.
hospital?
What happened?
We're doing Bank of England. Lisa and I, A, we don't know anything about it, and B, we don't care. Lizzie Burden saved us.
Well, Lizzie's great.
She saved us at Queen Victoria's.
Bramo wasn't here yesterday, Tom.
Oh, that was Charlotte. Maybe it was 2 days ago. I can't remember.
But it's
I
okay.
was here.
I definitely went down in flames yesterday too.
Let's talk about Apple. Falling in pre-market trading after reporting weaker than expected revenue out of China. The company also warning of a sluggish holiday quarter, with sales of iPads and wearable products expected to drop. A stock is dropping, Tom. I know you've got a different view on things. 172 in early trading, we're down 3%.
Up 37% this year. Arif Malik put out a 2026 Apple view at Citigroup, and basic idea here is they grow 10%. You know, 10% growth.
Look, I get it. Margins are still good. The shift towards revenue from services, fantastic. I understand all of that. Maybe that warrants a higher multiple.
Yeah.
Fact of the matter is, Tom, the bull's out there, no doubt will catch up with Dan Ives of Wedbush at some point in the near term, in the near future. He's been talking about this massive upgrade cycle, Tom, on the iPhone that just is not materializing. It's not happening.
The upgrade cycle is materializing, but the unit growth, particularly in certain things like iPad and that, is not happening. That is 100% true, overlaid with Bramo's concern about China.
Let's be very clear. I recently went to the Apple store. I saw people lining up to drop $1,000, $2,000, $3,000 at one pop. I understand the free cash flow. I understand it being taken out of my own personal bank account. What I'm questioning is just valuations when you're baking in growth at a higher yield regime, and whether it's already up, you know, the stock 37% year to date. What have we baked in? I'm going to get really good at this.
Keep going.
Is it time for a
This
nerd
is great.
banner?
It is, please.
Nerd banner. Let's
You didn't
do
listen
it.
to anything anyone
Citigroup
said.
now. Atif Malik and his team. Citigroup, Apple, free cash flow. They look out 3 years, 2 years. Pre-pandemic, $55 billion in free cash flow. They're estimating 18 months out, $128 billion. It's a terrible business. I don't want to be in that business.
Stock's a bit softer this morning. We're down about 3%, TK.
Up 37% this year. Sarah House doesn't own Apple. She's senior economist at Wells Fargo, and we get a brief on payrolls today. What is the run rate of non-farm payrolls between OMG, we're fully employed, and OMG, it's terrible out there? Is it 100,000, or could it even be less than that?
So roughly 100,000 is what you would need if you're seeing the participation rates stable to keep the unemployment rate where it is. Now, the Fed is projecting that the unemployment rate is likely to inch up over the next year or so, and if you look at its long-run projections, suggests that it needs to inch up. So in that case, we're looking at an even lower rate, sub 100,000, unless we are to keep seeing the rebound in participation that has been so strong over the past year. Then that's going to push it up a little bit, probably back to 100,000, maybe a little higher.
Who are the people to get us from it's an 100,000 rate to we're actually doing, to pick a number, 170,000? What kind of Americans are those people that are getting the jobs now where we say, well, they really shouldn't be?
Well, we want Americans to have jobs, but when we think of who's driving that rebound in participation, it's been concentrated in the prime age workers, so both men and women. So women's prime age participation, it's at a record high. Interestingly, a lot of that's been driven by mothers, particularly young children, as they're leveraging this remote work environment. But we've also seen a very nice rebound in prime age men's participation. Right. That is linked to some of the increase in immigration that we've seen as foreign-born workers do have higher participation rates, but also just the strength of traditionally male-dominated industries this cycle. So construction, mining coming back, transportation, warehousing, obviously very strong this cycle, and even manufacturing holding in there as well.
See, Sarah, you read my script. Here's a chart, folks. On radio, this looks great. This is the miracle chart of the American labor economy and fiscal stimulus. This is the prime age 25 to 54 employed percent in America back 3, even 4 decades. And the answer here is obviously, Lisa Abramowitz, a huge plunge off the COVID and pandemic. And with that stimulus, with our public policy, you know what? It worked.
And at this point, the question is whether we're going to see some sort of rollover that a lot of people are saying is required in order to get inflation back down to 2%. Sarah, do we have any information really to answer that conundrum, which is one of the biggest debates on Wall Street right now? Do we need not only sub-trend growth, but negative growth and a real drop-off in the labor market in order to get inflation back to the Fed's target?
Well, I think we need at least sub-trend growth, hopefully not necessarily negative growth, although we do think that's still a heightened risk environment. We have seen a lot of help on the inflation front from the supply side, so like the labor supply, which we were just discussing, but also, of course, from the goods side of things. So as we've seen supply chain issues improve, we've seen goods inflation come down from over 12% at its peak to flat now. And so we are seeing that improvement, but I think in order to get inflation all the way back down to 2%, as we've seen some of the initial help from that supply side improvement, it's likely to also take weaker demand, and that's where that sub-trend growth comes in.
Do you think that Fed Chair Jay Powell is pleased with the market's reaction to what he said yesterday? Or I guess Wednesday?
So I don't think he's probably aiming to guide the market one way or the other in terms of its actual reaction, but just trying to give clarity on where he thinks that the Fed is going as best it knows, or to what extent it doesn't know what their next move is going to be. And he knows that sometimes markets interpret what he says perhaps a little bit differently, or can run away with things. But I think that's not his primary focus.
All right, let's reframe this, because that was very politically correct, and it sounded very much like how the Fed would respond. I guess the question is, was the speech more dovish than you thought it should have been, considering the labor market that you just described?
So I thought overall that it was dovish in the extent that, yes, they left the door open for future tightening, but I think they are more cautious on what's ahead. So now they've held at 3 of the past 4 meetings, even as you had seen very strong job growth in the most recent reading, of course, that nearly 5% GDP number. And so I think they are getting to that point where, yes, he says they're still debating whether they go once more, but really it is becoming more about the duration of how long this hold is. And of course, the financial condition side has played into it, where they're acknowledging that they're watching that more closely by putting that in the statement. And of course, financial conditions have eased since the statement. So it's a little bit of a back and forth, but that's where that duration comes in. They'll just have to hold longer if they're not seeing that pass through in financial conditions.
Sarah, quickly here, fold in the jobs report today with the trends we've seen in claims of 220-ish. Per week. I mean, it's more weekly data, and I guess it still shows a wonderful job economy, but link those 2 reports together.
Yeah, so when we look at the claims data, so it's creeped up a little bit over the past couple weeks, but overall still very behaved, still very low levels, consistent with the run rate of job growth in recent months, still being very strong. But also important when we think about where hiring goes from here. We're still not seeing a lot of layoffs, so that means that if you are going to see that slowdown in hiring, to get something that is more sustainable, especially if you are still trying to tamp down wage pressures to cool cool inflation, that it's going to have to come from, at least right now, more of that demand for new workers. And we've seen that a little bit, but as of yet, still seeing pretty behaved layoffs, which again is leading to this gradual cooling in the labor market rather than that wholesale collapse I think perhaps was feared when the Fed was hiking so aggressively last year.
Hey, Sarah, thank you. Sarah House there of Wells Fargo on a payrolls report a couple of hours away. Phenomenal to still see these numbers. 180,000 is the estimate for today. For unemployment, Tom, looking for that to stick at 3.8%.
Yeah, not that long ago, it was like 4%, 4.2, you'd start getting sweaty, or, maybe even 4.5. And it's just a whole new regime out there. And now I don't pretend to have any answers, John, on what to make forward of the regime, other than I've got immense respect for people, and I use this with care, guessing about the nation's productivity. We don't know. Anybody who wants certitude answers. Coronado has led on this. She's been absolutely brilliant about saying, hey, what's going on? Is it maybe productivity?
I'm with Bramo on the Federal Reserve. The second line of the statement, second paragraph, just on tighter financial conditions. What matters on financial conditions is whether that persists. And based on the moves of the last couple of days,
not so much.
Lisa, you can unwind that really, really quickly, and all of a sudden that statement looks very, very dated. On Apple, Anna Adrana, up next.
Josh, that's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're going to ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination. It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
The iPhone remains like an exceptional product. I wouldn't say the Chinese are going to put out a phone that can compete with the iPhone, but we know that in the past, about 20 million phones were selling at Huawei, and when Huawei disappeared, that market seemed to have moved straight into Apple's hands, and that's a concern.
The brilliant Pierre Farago, Global Technology Infrastructure Head over at New Street Research on Apple. Apple a little bit softer, lighter, lower this morning. The stock is down by something like 3% so far this morning in the pre-market. TK following numbers after the close yesterday. Just in terms of revenue growth, there isn't any. There hasn't been for the last year.
Farago and Tim Forte have been the most right on Apple. There's no question about that. And I quizzed him late in that conversation, John, and it's very simple. He's not gloomy on Apple. but he says, does it tread water for 3 years or 5 years? And let's be clear, for a huge part of the Apple fanboy, fangirl community, fangirls like Lisa, I mean, for the fanboy, fangirl community.
Have we describing Bramo as a fangirl of anything?
Yeah,
because,
Bramo,
I mean, that's news to Lisa.
Bramo had to mortgage a child after exiting Apple.
I'm not sure that works for Bramo.
But carry on.
But Farragut's like out 3 years, 5 years, just saying, is this a treadwater stock? And that's a fear to a lot of the optimists.
Johnson's Fearsome Doom. One of my favourite notes comes every Friday. I know Lisa reads it as well. It's from Michael Hartnett over at Bank of America. It's called The Flow Show. And Tom, you'll like this line. Zeitgeist often talks about the zeitgeist. Here's the quote. So much anger, so much hate, yet unemployment is so low. Can you imagine the social disorder if unemployment hits 5%? That's why, his view, here's the punchline, that's why policy panic comes early in 2024. That's the zeitgeist in his mind.
Yeah, and I see it out there, and the wonderful Twitter feed bar chat, they were just out with a Goldman Sachs chart, which just shows the gloom in the hedge fund business. The hedge fund business over the equity market, and that was part of that short cover the other day. My mic here's, you're moving my mic around,
I didn't move it, I didn't touch it.
You know, okay.
All right.
Maybe too much bar chat.
I don't know what's going on there. Let's get to the price action.
Please.
Missed this. Equities right now on the S&P 500, negative by 0.1%. Biggest weekly gains, potentially, of the year so far on the S&P 500. Here are the scores. The S&P so far this week up 4.87%. The Nasdaq 100 through Thursday up more than 5%. TK, that is a solid week of gains on the S&P.
Dow up 5.3%.
Were you doing Dow points in my absence?
I'm making it up. We did Dow quotes as well. Let's save the show now, and you can always do that with Anurag Rana. He is truly expert on the cloud and has a partial interest in Apple Computer as well. Anurag, I want you to explain to the audience how a tech company runs their company for profit versus running it just at the top line. To me, Apple is a profit, cash-generating juggernaut. Why is that so odd, so strange?
Yeah, I think that goes back to the foundation of the company. It really believes in having high margin products. It does not believe in gaining market share. You know, even after all these years, it has only 18% of the unit market share of smartphones around the world. It can completely change that overnight if they drop the price of the phone, but they will never do that because they believe in gross margins more than anything else. Over time, they will gain enough market share in every market, but this is not something that they do is try to gain market share just for the sake of it.
It's a journey, Anurag, as you know. Before we start talking about lower prices, can we talk about the absence of higher prices? Have they lost pricing power?
No, I don't think so. The problem over here is people are keeping their phones for a longer period of time. If you were keeping it, let's say, for an average 3.6 years before, you're probably keeping closer to 4 years. So what that does is it just elongates the time it takes for you to refresh your phones, or for that matter, any other product. So I don't think it has nothing to do with the pricing power. The Pro Max is unbelievably expensive compared to the older models, and it's doing very well.
Clearly, the revenue mix growth shift is moving towards services, Anurag. How does that change your approach to value in this company?
Yeah, I mean, it has been a true surprise to see that number grow still in double digits. I expected that to be back into the high single digits by now. It has a high gross margin. It has a 70% plus gross margin compared to products, which is in the 30s. So over time, when you see the revenue mix shift towards services, you can expect the overall company gross margins to trend up inch by inch going up. And we have seen that already in the last few years.
Anurag, do you think that analysts are overplaying or underplaying the declines that we saw in China?
I think you have to sit down and think what kind of company this is. And I think this is really evident. And I've discussed this with Tom and Paul many times, that this is not a company that's going to grow sales in double digits. This is at best at this point, mid to high single digit company. And I think people are getting used to that fact. Yesterday, when they guided for December quarter, which the estimate was that it's going to grow about 5%, they said about flattish sales. And that's when the stock dropped. I think people need to come to that point that, refresh cycles are going up, and it's going to be a time before things are going to grow at that same pace.
Which then leads to a question of how much growth, how much future growth is baked into the valuation of the company that's seen a 37% rally year to date.
Yeah, I think valuation is something that we talk about a lot with investors. And, sometimes you have to really ask yourself, is this a technology company or this is a consumer staples company? Because if you take the hat of a consumer staples company, something like a Coca-Cola or a Costco, then you see things with a very different lens because those companies also are not growing, 8 to 10% top line.
Anurag, I want to look at something beneath the radar this week. It's a Friday, and in the world of Microsoft, it's a different Friday. It's a Copilot Friday. What is the importance of this announcement that Microsoft's making where we actually do AI with a modeled, marketed program for global corporations? What does Copilot mean to Microsoft?
So Copilot is basically an AI tool that goes with your original software package. In the case of Microsoft, it's launched that with their Office suite, which started selling yesterday. That's about $30 per user per month. And they're hoping that, the serious worker in the office, that's probably somewhere in the 150 million to 200 million people around the world that currently use the Office suite will some portion of that will opt for this particular feature to help gain productivity. Copilot can also be used in writing software. So it is just a tool that everybody has. They are the first ones to come out with it at such aggressive pace.
What's your prediction on this? I mean, come on, you've nailed the cloud. You got a cloud view out 3 years or 5 years, which is just absolutely remarkable. What is your prediction on how Copilot will do?
I think in our view, it's going to be very slow and steady because the $30 per user, per month is a very steep price. We think, adoption rate is not going to be more than 3 to 5% in the first year of it coming out. So, perhaps a $2 to $3 billion upside on that. On the software coding side of it, which is GitHub Copilot, we think the adoption rate is going to be very high, close to 75%, because I don't see any developer out there that can afford to write code without this tool right next to them.
Anurag, thank you, sir. As always, stock negative in early trading. If you are just joining us, Apple down by about 3% this morning. That was Anurag Rana there of Bloomberg Intelligence. Lisa asked about China. Tom Forte, D.A. Davidson making 3 points. Here's point 1. Weak macroeconomic conditions in the country negatively affecting sales. Point 2. We see Apple is caught in the middle of escalating tension between the US and Chinese governments. And point 3, the company is still over-dependent on China, Tom, on a supply chain standpoint. 3 points, and we didn't even get to competition there over in the mainland.
Let's be clear, the gentleman from D.A. Davidson has been dead on. He's been the best performing analyst over the last 12 months.
Catching up with him a little bit later. It's cut his price target. 166 from
which is 180. A long way from Dan Ives to 240.
Lisa, 172 right now.
To me, there are a number of big risks. I think you outlined them well, and Tom Forte nailed it, which is we can't really understand why there was such a bigger decline in the China region than people expected. I believe it was an 11% miss relative to expectations. Is it because of competition? Is it because of slower growth? And then what happens with the iPhone manufacturing in that region at a time where that's kind of massive, what accounts for, 80% of the production or something like that?
In the reports, it's not just a routine shift from China to India. A lot of people that are studying this that know a lot more than us are saying this is problematic. I mean, how do you actually execute moving manufacturing, say, to India?
Before you start buying the Huawei Mate. Is that it? Yeah. The Mate?
Yeah.
Is it available in America?
Although, hold on. To be clear, it sounds like it's not quite nearly as advanced as the iPhone.
I know.
And the iPhone, and the iPhone
on radio, if you can see
is
this.
still the majority kind of phone.
I'll tell you about it.
Okay, all right.
Hold on. Hang on a second.
Cheers.
Hands start to churn. Hands start to churn.
She goes,
I know.
I'm brutal.
Coming up in the next hour. Priya Misra, JP Morgan, Alan Zentner, Morgan Stanley, former Fed Governor Randy Krosner, Jeff Rosenberg of BlackRock. All of that still to come on this Payrolls Friday. Your estimate, 180,000. The previous number, 336. Live from a beautiful New York City. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Rain World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
Have lasting prosperity if you don't get price stability first.
People are looking for opportunities to come back into equities.
The outlook is for equities to be rallying into year-end.
Corporations are doing better navigating very tough environments.
We've kind of maybe been swept up in this optimism, but no matter what, that's got to slow over the course of the next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is Payrolls Friday, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market slightly negative on a session, up big time on the week. Your payrolls report about 90 minutes away. The number, Tom, 180,000. 180 is the median estimate in our survey.
I was surprised in the Fed meeting. We didn't hear data dependent all that often. And the fact is we are data dependent. It's not only what we see in non-farm payrolls, but emotionally for the president and for the chairman of the Fed, it's about the unemployment rate. Come on, we're still under 4%.
Drum roll, your favorite piece of this. You know how it goes. You ready? Good news or bad news? Bramo, let's play the game.
Yes.
What does this market want to see this morning?
Buying door number
180, 150, 100? Does it want to see 300 again?
No. Absolutely not. Absolutely. That would be the worst case scenario for markets. Maybe it's a really good scenario for the American economy. But what they would like to see, not too low, because that indicates real cratering, and that would be bad for risk assets. But they want to see, if it were 120, you can imagine there's going to be this incredible rally.
120 is your Goldilocks print this morning.
I think that would be pretty, that would be a real rally kind of inducing number, which is,
Bank
again,
stocks
ironic.
Want to see the same thing?
Exactly.
Bank stocks have had a massive week, Tom. That's the upside down world that we live in.
Yeah.
You get softer data, bonds rally, the Fed backs away. All the stuff that you'd think maybe bank stocks might need, but this year, no. because we don't live in that world
Right.
anymore.
Well,
Bank stocks this week are up big time. Take a look at the regionals.
While you were gone on your cruise ship, I was doing a chart on the BKX, the Keefe Bruyette and Woods Index, and I used the word grim. It was a grim chart. So I would suggest it was a pop, and dare I say a short cover in the banks off of that grimness. Now, have they all cleared? Gerard Cassidy was on yesterday, and he wasn't willing to say that now. But boy, was he optimistic out 2, 3, 4 years in the banking industry.
I'd love to do a survey and find out if anyone actually believed that I went on a cruise in the last 2 weeks. Me on a cruise.
Well, yeah, I mean, you know,
even if Carnival picked up the phone right now.
It wasn't Carnival, it was Royal Caribbean.
Royal Caribbean.
You were on a
Whoever it might be.
Symphony of the Sea.
In the Bahamas.
We will pay you to go on a
we-
cruise. I would never get on that boat.
That's not true. There's a price for everything. Come on.
What do you think that price is?
You'd be really
Surveillance
high.
cruise.
Whatever it
No,
is.
we do
Higher.
cruise.
Yeah, exactly.
Let's talk about Apple in the pre-market. Apple's down about 3%, a little bit softer in early trading. Tom, we know the numbers well at this point. 4 quarters revenue growth absent at the company. Can they turn it around going into 2024?
We got some good analysis coming up. Tom Forte at Davidson has got a real cautious view. In fact, his target is below this price of 172, and there's others that completely go the other way. China's a problem, but it'll get fixed and up above $200.
Margin's good. Service revenue.
Margin's
at a
not
record.
good. Margins are great. And
Yeah.
and
That's the
Anurag
bullish
mentioned
thesis.
that the service sector overlay, and it's a nice straight vector. It's up at 20-some%. I can't remember. But the answer is that's all profit. It's like 70%.
Let's turn to stocks. Equities, just negative by 0.2%. We'll go cross-asset, look at the bond market. This bond market's turned around big time, hasn't it? 2 Mondays ago, 5% this morning. Lisa, 465.75.
And I will just say that my takeaway from the Fed meeting, strategically patient is the new substantially restrictive. We're going to talk about strategic patience quite a bit. 8:30 a.m., we do get U.S. non-farm payrolls, as well as ISM services at 10 a.m., but really all eyes are going to be on the labor market. My eyes are going to be on the bond market's reaction to this labor market. What is the sweet spot of just enough softness to lead to an even further rally as people expect the Fed to be done? Today, Secretary of State Antony Blinken is in Israel. The expectation is he will give a press conference around 8 a.m. I personally am more interested actually in what we hear from Hezbollah's leader in Lebanon. It is the first time he's speaking since October 7th. He'll be speaking at 9 a.m. Eastern time and could give some indication of the contours of any kind of escalation or not to come. And today the Fed speak returns. Fed Vice Chair for Supervision, Michael Barr, he speaks twice. Minneapolis Fed President Neil Kashkari. 3:30 p.m., don't miss this. Atlanta Fed President Raphael Bostic sitting down with Michael McKee. Do they echo what we heard from Fed Chair Jay Powell, which is not really kind of indicating that they had a need to go further? They are strategically patient.
Depends who. Raphael Bostic, absolutely.
Yeah, he's a big...
I think he wanted out a few months ago from the communication we've had. Mike McKee, let's see what Mike McKee thinks. Mike McKee doesn't get a vote, of course. We'll hear from him a little bit later.
Maybe.
Priya Misra, portfolio manager at JP Morgan Asset Management, with us around the table. Priya, good morning.
Morning.
Talked about those levels in 10-year yields, amazing. 2 Mondays ago, 5%. We're going higher.
Exactly.
Here we are, 465. Have we seen the highs in this treasury market?
I would argue yes. I think if you look at the move in the last month or so, it's been a very technical driven move. Once we broke that 430, 440 level, it was, a lot of essentially short positions being put on. This narrative built that there's no demand out there for treasuries. What we saw this week was we saw some softer data. We saw that the treasury essentially responding to the move. The treasury actually cut back some of that long end supply. And we heard from the Fed that the bar to hike further is high. This vigilance and caution from the Fed, they're sort of bringing up this whole lag story back again. So they're waiting for the long and variable lags to play. So I think for us to break 5%, we really need that narrative to come back that there's no demand. I would argue the highs are set. How low can the 10-year go is all going to depend on how does the economy, fare in terms of those lags essentially coming back.
And link it to the 2-year, the vanilla spread, the difference in yield between the 10-year and the 2-year. You more than anyone called the magnitude of inversion what you would see. Where are we now? Have we disinverted to where Priya Misra says this is wonderful, or do we need to disinvert more and even go to a positive difference between the 10-year and the 2-year?
I think for it to be really positive, it has to be driven by lower rates. And that's going to need the economy to show signs that, that monetary policy is extremely restrictive. I think that's what results in the next 100 basis points of steepening will be through lower rates. But I'm glad you bring up the 2-year. I mean, all this talk about the market pricing in significant cuts, we're only pricing in 125, 130 basis points of cuts. So what the market's telling you is that they're pricing some easing, which will be consistent with a soft landing. The market is not at all pricing in the risk of a hard landing. I would argue it's 10%, 15% chance, this bimodal world, that there's a very small percent chance of a hard landing, because in that scenario, the Fed is not just stopping at 4%. And what the Fed funds curve is telling you, that the market's pricing in the Fed funds rate to be above 4% as far as the eye can see. That's essentially what the bond market's telling you. No hard landing, that the Fed's going to never cut rates below 4%. I think that's highly optimistic. If you look at the tightening in financial conditions, you look at the cracks that are developing, I think there's a decent chance that the Fed may have to cut a lot more. They don't want to acknowledge it. They're not even thinking about cutting rates. At some point, they're going to have to acknowledge that they may have gone too far.
What we're seeing right now is a lot of people pointing to the refunding announcement as driving a lot of the reaction, particularly on the long end. The front end may be a little bit more tied to what we heard from Fed Chair Jay Powell. Has all of the action in benchmark rates, at least in the long end, been tied to supply?
So I would argue the narrative is certainly there that there's too much supply. I would say the issue was demand. The demand side went back. You know, we know that the U.S. has this unsustainable fiscal trajectory. There's a lot of supply coming in. But if the demand is there, then at some clearing level, the two meet. What happened in the last month or two is that the demand side pulled back. Because if the Fed's going to hike a lot more, if the data remains resilient, then where is that clearing price? I think what we saw is if the Fed is done and if the Treasury is responding, I think the bond market spooked the Fed, spooked the Treasury, spooked risk assets. That's normally a sign that the move is done.
Is the spook over in terms of giving you confidence to go in?
You know, I think yes, I would say the market spooked enough for me to have confidence that we've near peaked around 5%. For us to say that we're going to 3% or 4%, I think for that we're waiting for data. I think we might stabilize between 4 and 5% right now. If it turns out that the economy is actually a lot weaker, then I think we can absolutely move lower. But you know, we could essentially range trade for some time.
How do you fold the events which we've barely talked about this week with all the distractions of, say, euro-yen out to 160? How do you fold the confidence that the Japanese will show up at the margin to buy our full faith and credit paper, given the failure of YCC?
Right. I'm glad you bring up global rates for a couple of points. The BOJ was a pretty big deal. I think central banks this week, I would say in October, have been essentially a vol killer. I was nervous around the BOJ because if they just drop yield curve control, that would inject a lot of volatility into the market. The BOJ said, no, not so fast. We're going to be really slow in terms of how we're going to let yield curve control go away. So I think that reduces vol. You have central banks. I would argue October was the first month in many months that no central bank hiked rates. So I think now we look at global divergence. We do think, you know, there are countries like Canada, the UK, where the transmission mechanism or the lags are much shorter. They're already weakening. The US has been more resilient. I would argue the lags will just play out here as well. So I think some of this divergence or US exceptionalism that we've been dealing with for the last 2 years, some of that's going to go away. That hedging cost that you're talking about, Tom, I think that hedging cost goes down and it brings foreigners over time back to the Treasury market.
You said the BAFA hikes had got higher as the BAFA cuts got lower.
I don't think so. I think the Fed is probably traumatized by what happened in terms of inflation. I think they've lost some credibility. So I think the bar for cuts is also very high. And that's going to be really tricky for the market. We've been used for the last 20 years for the Fed to respond right away. I think financial conditions tighten. They may not hike a lot more, but at what point do they ease? I don't think they want to ease financial conditions significantly. So I think we may be in a period of high volatility where we wait and see where's that strike price for financial conditions.
This is what I'm trying to figure out going into next year. What am I looking for?
You know, I think if the data holds up, the Fed is going to be extremely reluctant to cut rates. even if financial conditions ease, I think if the data falls off, then the Fed can say, well, actually, the unemployment rate is rising significantly, which is why, they may have to start to ease. I think it is going to come back down to the data. I think the data will drive, data dependence will come back in terms of when the Fed eases, but that inflation is just annoyingly for the Fed staying a little bit sticky, and if it stays above 2%, that bar, I think, to cut remains high.
It tells you something's changed, though. The fact that we just had close to 5% GDP in the third quarter, and Bramo, we didn't get a move from the Federal Reserve.
And they seem to indicate that the risks are still balanced and really emphasize the need to remain cautious, strategically patient.
It's amazing how the tone shifts in fixed
What
income.
is
35 basis
strategically
points
patient?
later in the other direction. What was that,
Where
Tom?
did strategically patient come from?
I think it's just a
While
new
you
phrase.
were gone? No, it's a new phrase, John.
It's a
While
new
you were
phrase.
gone.
Proceed carefully. Strategically patient.
Wait for data.
I think that's called, what do they call that? Strategic ambiguity.
Strategic ambiguity, yes.
Strategic ambiguity.
It's a strategic pause.
Yes. Okay. Priya, thank you. It's good for the update.
Thank you.
Priya Misra there.
Thank you so much.
Of JP Morgan Asset Management. If you are just tuning in, welcome to the program. Your S&P 500 negative here by 0.2%. Yields are going absolutely nowhere on a 10-year, 465.75. Crude, 82.66. You can guess the world. What's it going to look like? What's going to happen? And then you can get the market wrong. Crude in the month of October. Bravo.
To me, actually, one of the most interesting things that any guest said was Amrita Sen. And she said the reason why we haven't seen oil prices pop, and she'd been expecting $100 a barrel on Brent going into Halloween, she said it's because of demand. It's not there in the same kind of way, even though you might get some sort of supply constraints based on what's going on in the Middle East.
Crude down 11% in the month of October.
Yeah.
Down 11%.
Yeah, while you were gone, John, I was looking for a 79 handle on West Texas Intermediate. We never got it. We didn't get to 79. But could I have said anywhere within October that we would get to 79 on American oil? No way. And yet there's where we are.
If you're playing the drinking game at home, if you were gone, you are drunk at 7:13 Eastern Time. How many times are you going to do this when you were gone?
Up until I talked to McKee. Rarely, folks, rarely does Michael McKee come out and say, guys, this is important. He thinks Detroit and Dearborn are important. The on-strike statistic for Mike McKee today is 48,000 workers.
I actually just got a message saying that they thought that you had gone to join the United Auto Workers Union based on some of the contract negotiation.
What's more believable, that I joined a union or went on a cruise?
I'm not sure.
Come on. Nadia Lovell, UBS, in the next hour on this Payrolls Friday. Your estimate, 180,000 from New York City. Good morning.
Through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Earnings season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers
It's
first.
a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power. We're going to make more money. We're going to make more money. And we're going to make more money.
We're going to make them bank. And I think that is what we could take away.
Bloomberg Television and Radio. Context changes everything.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Last month's jobs report caught everyone off guard.
Major upside surprise on the headline number.
Considerably stronger than people thought.
Almost twice as much as what the expectation was.
Today, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Rates are going to have to stay higher for longer, potentially even go higher.
Can there be lasting damage here?
Those cracks are starting to form.
The October jobs report, today on Bloomberg Television and Radio.
Israel doesn't need a ceasefire. It needs its allies to cease with the politics and deliver support now. And that's what we're doing. House Republicans plan to do that. We're going to do it in short order, and it provides Israel the aid it needs to defend itself, free its hostages, and eradicate Hamas, which is a mission that must be accomplished. All of this, while we also work to ensure responsible spending and reduce the size of the federal government to pay for that commitment to our friend and ally.
That was House Speaker Mike Johnson. Some division down in Washington, D.C. over those comments. We'll be talking about them in just a moment with Bloomberg's Anne-Marie Horden, our chief Washington correspondent. I want to talk about a couple of names in this equity market. We'll start with equity futures on the S&P 500. We're negative by 0.2%. Here's a name for you. Maersk, the shipping company, is down about 15%. This line on subdued demand, not just into next year, but maybe over the next few years. TK, job cuts, they're going to continue a subdued environment over the next 2 to 3 years. The stock is down 16%.
It's really important. This is basically FedEx on steroids for our American audience out of Copenhagen, and with all the heritage that they have of shipping worldwide. Think of the logistics of UPS, the logistics of FDX. This is a global statement on what's out there, and it alludes to what the IMF has said about global growth out to 2028.
These are the opposite headlines, Lisa, that we were reading maybe a couple of years ago. Overcapacity. We're now talking about overcapacity. That gap is growing in shipping, according to Maersk this morning over in Europe.
That was exactly the right point to pick up on, John. I think that what this highlights is a shift from 2021 and 2022, when there were record profits on the heels of this demand for goods with the pandemic. There is a larger question here. We've got to parse through it. I don't know the answer. How much is this an unusual below-trend kind of trade due to all of the rejiggering of supply chains versus just some sort of reversion to normal?
You put it all together, subdued demand for Maersk, really bad data numbers coming out of Apple on China. Demand a bit softer, Bramo. I'd point out ISM manufacturing earlier this week as well. That wasn't a pretty print from the ISM this week.
That actually turbocharged the move that we got from the refunding agreement earlier that morning. I think that what you're talking about, though, is right on. We are seeing diminishing growth. But to what level, right? What is the new normal? And I think everyone is grappling with that. We heard that from Priya Misra talking about how far do yields go down? How slow do we see this slowdown really escalate to?
And plenty of reasons to worry in the fourth quarter. This bond market's turned around big time. Let's look at the scores. 2 Mondays ago, I've said this a few times already this morning, 5.01% on a 10-year. Your 10-year right now shaping up as follows. We're back to what? 460, Tom? 465.12 on a 10-year this morning.
To be clear, the equity markets really don't pull back. I mean, up 1 day, up 2 days, up 3 days, and you'd think we'd give up more here on the tension of the jobs report and all. Futures -7. I mean,
it's
that's
not
noise.
much of a move. I mean,
yeah, it's noise.
Given the weekly move we've had, Tom, the S&P up by something like 5%.
Well, we go to the jobs report here in an hour and 15 minutes. Right now, on a war and a conflict, Lisa, I think, is really right to focus on Hezbollah and maybe what we hear from northern Israel, southern Lebanon today. We get a brief from Anne-Marie Horden, our Bloomberg Washington correspondent. This was the Secretary of State in Israel. Anne-Marie, I'm going to use these words with great respect for the nuance and the horror that we're all seeing. In your world of the Beltway, as we just heard the Speaker of the House, is this perceived as like a war? Is it perceived as a conflict? Or is it perceived as something I can't make up?
I think it's perceived as a war at this point, and this goes to show that Congress yesterday and the House of Representatives passed this bill, more aid to Israel than even the president had requested in his original supplemental. Of course, there's a lot of politics attached to this. Even though you did have about a dozen Democrats vote for it, very heavily Jewish districts, definitely want to send that aid to Israel. but it comes with this rescinding of cash that's given to the IRS. The CBO already says that this would add to the deficit. Maya McGuinness was on yesterday, and she said this just doesn't check out. So it is dead on arrival in the Senate. The president has already said he'd veto it, but it does give this new speaker some momentum and a win for him to be able to show that he can work with his caucus. This is the first big test for him. And then at some point, they're going to have to figure out how they're going to pass this bigger package that the president would actually sign.
In January of 1942, Anne-Marie, did we link World War II Defense Department, War Department funding with what we're doing at the IRS? I mean, this is a whole new world for Washington, isn't it?
Well, this is why Democrats specifically are saying we cannot set this precedent that every time there is a need for an urgent request for money, whether it's to help national security partners around the world or it's to help with, say, a hurricane in Florida. We cannot set this precedent that there needs to be a pay for in the budget to offset this when there is an emergency request. And that is why there's a ton of pushback from the White House, from Senate Democrats, from some also as well hawks in the Republican Party, especially on the Senate side, that this is just not the path forward when you want to send money to your ally.
Meanwhile, we've seen a real shift in tone from President Biden over the past couple of days, really emphasizing humanitarian efforts, but also protecting civilian lives in Gaza at all costs. Supposedly, that was one of the key measures that Tony Blinken is going to emphasize as he speaks with Israeli leaders today. What do you think is driving that shift in tone? How much is that tied to the divisions within the Democratic Party?
I think it's two things. I mean, everyone is seeing these horrific images of civilians, especially children, that are dying by Israeli airstrikes in Gaza. And what the president says that he wants a pause because these individuals, Palestinians living in Gaza, are really suffering in terms of not getting humanitarian aid. You know, I read the UN reports every morning, and the situation is dire. So the president is calling for a pause, and why it may sound like semantics. What's the difference between a pause and a ceasefire? A ceasefire means an end of fighting on both sides, and usually it means a path towards a political resolution. A pause allows for, depending on the geographical location, the scope, the timing, that there will be no fighting so that humanitarian aid, food, medicine, those kind of supplies can get in. And I think that's the message Secretary Antony Blinken is bringing to Israel today. He's meeting with the war cabinet, meeting with Benjamin Netanyahu, but the Israelis say there will be no ceasefire. And then domestically, the president is under a lot of pressure at home from the progressive wing of the Democratic Party and also constituents in places like Michigan, the Palestinian diaspora, Muslim Americans who do not want to see more aid to Israel. And this is why this is an incredibly difficult thread for this president to really try to needle through.
When you talk to advisors, to the president, to the Democratic Party, how worried are they about the fragility of his ability to be reelected based on some of the loss of support over the past few months?
Everyone will tell you it's just way too soon. We're about a year's way, almost, a few days left to marking the 1 year into the presidential election, and they will just say it is way too soon to start talking about how this is going to impact next November. Obviously, we have heard there are concerns when you talk to congressmen and women that represent these districts, but it is still a long way off. Where are we going to be with this conflict November of next year? No one knows right now. What Antony Blinken said before he got on that plane to head off to Tel Aviv was that they want to do everything they can to deter a wider conflict. And that's what this administration's focused on. If they can do that, they're in a better position next year.
MH, thank you. Anne-Marie on the latest down in Washington. Difficult to project things out to next year, Tom, but ultimately let's make a judgment on where we are right now. Maybe even an observation. The world coming towards Nikki Haley. Tom, on the Republican side over the last few weeks.
Yeah, I would agree with that. I think it's disjointed away from the actual war news that we're seeing in the Eastern Mediterranean, but certainly she's had a better October than many, I guess is how I'd put it.
You remember that moment in 2008 when the financial crisis hit and the world moved away from the late Senator McCain in that race against Obama? It became about a financial crisis and no longer about his foreign policy.
Yes.
Things can change. Things can change really quickly.
They can change quickly, but again, as Anne-Marie Horton said there, it's such a long campaign. I yearn for the British process.
It was 6 weeks over and out, something like that, a couple of months. I know. Ellen Zen and Morgan Stanley coming up shortly on this payrolls report. About an hour away, your jobs report, the estimate 180K from New York City. This is Bloomberg.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behavior was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
The top names at the Fed are on Bloomberg.
The economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough.
The bond market has tightened quite considerably. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Nobody covers the Fed like Bloomberg. Context changes everything.
As things stand, biggest weekly gain on the S&P 500 back to November of last year, up by 4.87% over the previous 4 days, up every single day this week, down on the session this morning. We're negative 0.1% on the S&P, futures negative on the NASDAQ, down a third of 1%. So far this week, though, the NASDAQ up by more than 5%, TK, a weekly gain through Thursday of 5.21% on the NASDAQ 100.
Starting right out at 2 p.m. there on Wednesday, and it's just the lift has been tangible and really persistent. And again, I'm going to go, well, there it is. The Dow just went green on the screen. SPX -6 right now. And, you know, you got to see at 8:30 where we